Okay, good evening, everyone. Welcome to Byju's Exam Prep IAS. This is Sham Kagod here. Now, before I start the discussion, okay, if there is no issue with the sound, can you please give me a thumbs up so that we can start the discussion? Done. I'm audible to you? Let's start. So, yesterday, what we have discussed, we continued the discussion on the concept of taxation. Right? In taxation, yesterday, we started with capital gains tax, CGT, capital gains tax. What is the idea for capital gains? Very simple. You will purchase the asset, you will sell the asset after a certain time period. For whatever number of days or number of months or years, you will have the ownership of the asset. I'll call this as holding period. So whenever the holding period will cross certain threshold and you make gains on the sale of the asset, government will impose long-term capital gains tax. You purchase one asset, sell it before the threshold time period, right? That is, let's say, generally 3 years. In that case, right, the on the gains that you have made, government will impose and collect short-term capital gains tax. Then we have discussed the idea of a tax avoidance. What is the tax avoidance? It refers to certain actions that are taken by the taxpayer which are not illegal, but the taxpayer will be able to reduce the tax liability, right, that he owes to the government or the company owes to the government. That is basically the idea of a tax avoidance. In that context, we have discussed how minimum alternate tax will work. What is the concept of base erosion, profit shifting? What is the idea of a global minimum corporate tax, right? And after that, we entered into the idea of goods and services tax, GST, goods and services tax. Under goods and services tax, what we have discussed? One, we have understood the evolution of GST, right? I hope remember the evolution, right? That is, for example, before the VAT system was introduced, there were two types of taxation systems, one by the central government, second by the states. Central government used to have, right, the basic indirect tax of excise. States would have an indirect tax, that is a sales tax. And because there was two different taxation systems, it actually led to cascading effect. In order to address the cascading effect, the government introduced, that is the state governments, I repeat, state governments introduced VAT systems, value added taxation, where the government said whatever taxes you pay on the inputs, whatever taxes you pay on the inputs, they'll be credited back to you. And because you are getting an input tax credit, ITC, input tax credit, the supplier would not simply transfer the tax burden to the customer, and that would reduce the cascading effect. That would simply reduce the cascading effect in the system. But we have discussed this also yesterday. Even though we introduced the concept of a VAT system, because of the central government taxes such as CST, there was a cascading effect. And that is a precise reason. Now we have introduced a new model of taxation, indirect taxes in India, goods and services tax. Right? What are the objectives of goods and services tax? One, we want to make it easier to conduct a business in India. There are multiple indirect taxes, both at central level, at the state level. We want to subsume all of them, have only one national market. And what is the whole idea of GST? One nation, one indirect tax, and one national market. Then we also want to promote logistics sector or the transportation sector in India. We want to reduce the cost of transportation. We want to bring in more and more companies, taxpayers under GST, so that the tax base will widen. Tax base will widen, and automatically the collection of taxes will increase. Now, in order to achieve all of this, point number one, we have amended the Constitution of India. We have amended means we have changed Constitution of India. And with the introduction of this amendment in the Constitution of India, now certain central indirect taxes have been taken, the state indirect taxes have been taken. They are kept under only one tax, that is GST, goods and services tax. And if you remember yesterday, I told you GST rates. I'm using the term slabs here. Slabs simply means rates. The GST rates in India, these are the most important GST rates: 5, 12, 18, and 28. And all these GST rates are equally divided into two parts. I repeat, all these GST rates are equally divided into two equal parts. If you take 28%, 14 and 14. If you take 5%, 2.5, 2.5. If you take 12%, 6 and 6, etc. So equal two divisions will happen. One is called as a central GST. Central government will get it. Second one is called as the state GST. That is the state where consumption will happen. It is that state which will get the SGST. And that's the reason I told you yesterday, because SGST will go to the state where consumption will happen. GST is a destination based tax or consumption based tax. There are certain goods which are exempted. Alcoholic liquor for human consumption. Yesterday we have discussed how, right, why, how alcoholic prices are decided, how petrol, diesel prices are decided, etc., etc. Please remember all of it. Then there is also, right, one more point here. There are certain commodities which are covered under GST, but the government is yet to, that is GST Council is yet to announce GST rate on it. For example, fuel products, petrol, diesel, aviation turbine fuel, etc., etc. Okay. Now the last point that was left out yesterday was compensation. In this slide, the last point that was left out was the idea of a compensation. Let's have a discussion regarding compensation now. Now, what is this idea of a compensation? Let me explain it to you. Imagine you are the chief minister. Let's start. Let's start with a joke. Imagine you are the chief minister. Again, don't take it personally. Now, obviously, because you are the chief minister, you will have lot of indirect taxation powers with you. Any problem with this? The state government will have lot of indirect taxes powers. Let's say hypothetical. I'll take a simple example here. Imagine right now you have the indirect taxation power to impose a tax on the bottle. Point number one, you have the power to impose a tax on bottle. You have the power to impose a pen on the marker. And you also have the power to impose indirect taxes on this remote control. On this remote control. That's point number one. Now, is it okay if I say, as per your requirement, you will decide what will be the indirect tax rate on all the three products? Is it okay? I'll repeat it again. As per your requirement, I'll call this as A, I'll call this as B, and I'll call this as C. Today you can have 10% for all of them. Tomorrow, some of you are saying no. My dear, that is the reason I said you are the chief minister of the state. Right? Because these are, right, covered under, let's say, the VAT system, value added taxation. Today you can have 10% on all of them. Tomorrow you can have 10%, 12%, 15%. Day after tomorrow you can have uniformly 15%. You will decide it. The VAT power is there with you. You can change as per the government requirement. This year you want to collect more tax revenues, you will impose more taxes. Next year you want to reduce the tax burden, you will reduce the taxes. Now that is point number two. Point number three. This is important point. Point number three. Now central government will propose GST. Union government has come out with the idea of GST, goods and services tax. And the government says the bottle as well as the marker, that is the pen, the bottle as well as marker now will be covered under GST. The bottle as well as the marker now will be covered under GST. Means what? It is the GST Council which will decide what will be the GST rate applicable when the bottle is sold in the state and when the marker or the pen is sold in the state. It is the council that will decide. A simple question to all of you. When you give away the taxation powers, when you give away these taxation powers, will you be worried about how much GST tax you will get or not? will be concerned about how much money you will get from the taxation or not. You should be concerned, by the way. Some of you will say, no, sir, I will not be worried. The argument is that until now, you could decide what is the tax on the bottle. What is the VAT on the bottle? You had the power. Now, can you individually decide GST rate? Can you individually decide what is the GST rate on this bottle? Absolutely no. It will be the GST Council. So when this discussion was happening, right, when the discussion was happening, what should we cover, what should be exempted, etc., etc., the state ministers, or that is the state governments, said we are concerned about the tax revenue. We will give away the taxation power, but what if I give away the taxation power? Then the amount of taxes I will get under GST will be very low. That is, imagine hypothetically, imagine from the bottle as well as the pen, you are able to collect 100 crore rupee tax today. Right? Assume this. You are able to collect 100 crore rupees this year. You will give away the taxation power to the GST Council. Next year, both the bottle and the pen will be imposed with GST. You will get SGST on it. What if you are able to collect only 80 crore rupees because of GST? Don't you think you have incurred revenue losses here? Let me know. Have you not incurred a revenue loss here? So why will you give away the taxation power? So that was the concern. The states said we are concerned about our revenues. And that is the precise reason central government introduced the concept of GST compensation. The central government implemented a compensation concept. Now what will happen in the compensation? Let me explain this. Follow this very carefully. Under the GST compensation, the formula was very simple. Under the idea of GST compensation, the formula was that from, let's say, this year to the next year, I'm writing Y1 and Y2. Okay, that is year 1 and year 2. From this year to next year, we will simply assume that your tax revenues will increase by 14%. I'll repeat the point here. From this year to the next year, we'll simply assume that the amount of taxes you are collecting will increase by 14%, which means on the bottle and the pen, of course, you will have to focus on only those goods which are under GST. I hope you understand this. Right? Have a look at this. In calculating how much is your revenue loss, can you count the taxes that you have collected on petrol and diesel? Think of it. When you are calculating how much is your revenue loss, should you include what is your revenue from petrol and diesel? No. Why? You do not have GST on it. And in this example, should you include even the taxes earned on the remote? You should not include in this example. Why? The taxation power on the remote is still there with you. The taxation power on the remote is still there with you. Again, this is an example. Can you understand example? Right? So you should not include the taxation on remote. You should simply include how much revenue you collected on bottle as well as the marker or the pen this year. Let's say you collected 100 crore rupees. This year you have collected 100 crore. Now look at the formula and tell me how much is the expected revenue. How much is the expected revenue in the next year? How much revenue you should be able to collect next year? You should be able to collect 114 crore rupees next year. Right? Some of you are saying next year also 100. My dear, that is the reason. Please listen to the lecture carefully. Whatever is your tax revenue this year, next year, we will simply assume it will increase by 14%. It will simply increase by 14%. That is what the formula says. Which means next year you should be collecting how much? 114 crore rupees. 114 crore rupees. But in reality, what would happen is, let's say you got the SGST component, etc. You are able to collect only 70 crore rupees. Under GST, you will get only 70 crore rupees. How much is the expected revenue loss here? How much is the revenue loss in this case? The revenue loss in this case is 44 crore rupees. Some of you are saying 70 crore. How? Revenue loss. Can you understand the term revenue loss? You are expected to earn 114. You earned. I will write, Baba. You people are very dangerous. Even shouting at the top of my lungs. Right? I'm shouting at the top of my lungs. Expected revenue is 114 crore. And you earned 70 crore rupees. So how much is the revenue loss here? The revenue loss is 44 crore rupees. Right? And now Government of India would simply say this 44 crore rupees will be provided by the government in the form of compensation. This 44 crore rupees will be provided in the form of compensation. So in this way, from one state to another state, I hope you understand my point. From one state to another state, the formula was applied. How much is the expected revenue collection? How much they have actually collected under GST? If there is a difference, right, the revenue loss was provided in the form of compensation by the government. Now, two very important points here. Can you keep on providing these revenue losses, that is in the form of compensation, every year for 100 years? For 200 years? 300 years? Of course, no. You cannot keep on giving it for a longer duration. So Government of India, when they introduced the concept of compensation, they stated that the compensation will be provided for 5 years. The compensation will be provided for 5 years. Right? And please calculate now. The GST was implemented on the 1st of July 2017. CSAT question. Right? In the GST concept, it was implemented from the 1st of July 2017. If we add 5 years to this, can I simply say it will basically take you to end of June 2022? At 30th June 2022. Any problem with this? 30th June 2022. And if you look at the calendar, have we already crossed 30th of June 2022? We have already crossed 30th of June 2022, which means right now Government of India is not providing any compensation for the revenue losses for the states. Is the logic okay? Because the 5-year duration is over. For 5 years we have provided the compensation. After that we have not provided any compensation. That is, after June, compensation has been stopped by the government. Point number 2. Some of you are saying, sir, expected revenue is 114 crore. If we have earned 70 crore rupees, there is a revenue loss. Now, some of you are asking, what if? What if? This is interesting. This is where generally students don't think. Why I'm saying interesting? The revenue, expected revenue is 114 crore. What if I collect more than that? This is what the students are asking. Right? Just think of it. The expected revenue was 114 crore, 114 crore rupees. What if I earn, let's say, 120 crore rupees? What if the state earns 140 crore rupees, 150 crore rupees? Now, you please tell me, if your GST revenue is more than the expected revenue, is there any revenue loss? I'll repeat the question. Right? If your earning is more than what is expected, is there any revenue loss? No, there is no revenue loss. And if there is no revenue loss, will the government give you compensation? Think of it. Always think like this. If there is no revenue loss, why will the government give you any compensation? Of course, government will not give you any compensation. That's a simple answer to your question. Now, next very important point. Central government says, I will give you compensation. But from where the money will come to the central government to provide compensation? This is also very important. Let's start. For providing compensation to the states for the revenue losses, the central government implemented something called as compensation cess. I repeat, for providing the compensation to the states for the revenue losses, right, the government implemented a concept called as compensation cess. Do you remember the concept of cess? We have discussed this day for yesterday. Idea of a cess. Cess is imposed and collected for a specific reason. Now, what is the reason here? What is the reason? It is only to provide compensation to the state governments if there is any revenue loss for the state governments. Now, for all the goods, the compensation cess was not implemented within 28% GST rate. 28% GST rate. Within 28% slab, many goods and services were identified, and the government said, in addition to 28% GST, I will also impose a compensation cess. CC is nothing but compensation cess. In addition to 28% GST, you will have to pay 28% GST. But along with that, you will also have to pay compensation cess. Government collected this, used it to provide compensation for the revenue losses incurred by the state governments. This is the third very important point. Fourth very important point. Many of you who have read the newspapers are asking me, sir, you say compensation period is over. Agreed. But I also read in the newspaper the compensation cess which is imposed has been continued. Understand the point here. Please understand this point. Slightly technical. The compensation cess which is imposed by the government, it has continued. Right? They have not stopped collecting it. It has continued. But on the other hand, you are saying that after June 2022, center is not giving any compensation to the states. Then what is the logic behind it? Logic is very simple. Understand the logic here. During the pandemic, what happened to the GDP? Tell me now. This is where you apply your the economic concepts. What happened to GDP? Did GDP value increase or contract? GDP value contracted. Contracted means went down. Now, simple question to you. If GDP value will go down, what will happen to the GST collections? Think of it. If the GDP value will go down, what will happen to GST collections? GST collections will also go down. And when the GST collections will go down, what will happen to the revenue losses for the states? What will happen to the revenue losses incurred by the state governments? Revenue losses will increase. Revenue losses will start increasing. It will be very high. Now, this is the situation. Please understand this. I'll just take an arbitrary number. Imagine you have imposed compensation cess and you have collected, let's say, 180 crore rupees. Hypothetical calculations. Do not worry about exact numbers. You have imposed a compensation cess. You have collected 180 crores. But the revenue loss is, let's say, 250 crore rupees. Is it possible to pay 250 crore rupees using 180 crore rupees? Just think of it. Is it possible for the government to pay 250 crore rupees using 180 crore rupees? It's not possible. State governments basically said, this is the formula you told us and we want this revenue losses. So what did the central government do? Central government borrowed, took loans from the market. Simple. Central government borrowed or took loans from the market and paid the 250 crore rupees to the state governments for their revenue losses. Now, who has to repay this loan? Who has to pay the interest as well as repay this loan? It is the central government. It is the central government. From where will the central government get the money? The compensation cess. I hope you understand. Central government will get the money from compensation cess. Right? How is that possible? Tell me now, after June 2022, will the central government provide any compensation to the states? Think of it. Right? Will the central government provide any compensation to the states? No. But they have continued to implement and collect compensation cess. That money which is implemented now in the form of compensation cess, collected by the center, will be used to repay the loans that the central government took during pandemic to provide for the revenue losses for the states. Is the logic okay? Any point is not making any sense to you, please do let me know. And this is my advice to you. Do not by heart numbers. Please do not by heart numbers. UPSC will not ask you numbers. Concept is important. Suddenly UPSC will ask you, even though there is no compensation. Why there is a compensation cess? This is the answer to that. This is the answer to that. To repay the borrowings done by the central government. Okay. Shall I go to the next one here? Shall I go to the next one here? How central will manage? I'll repeat it. Central government imposed and collected compensation cess. But this money was used till June 2022 to repay or to pay revenue losses of the states. But during pandemic, what happened? During pandemic, what happened was the GDP went down. And I hope you understand the connection here. GDP went down means what? The GDP value went down. And GDP represents what? GDP represents market prices of all the goods and services. So if the market prices of all the goods and services went down, which were sold in the market, obviously GST collection will go down. And if you apply the formula from 1 year to next year, it will increase by 14%. If you apply the formula, the expected revenue would be very high. Because of the GDP contraction, GST collection by the states would be lower, which means revenue losses incurred by the states would be very, very high. And during that period, because the GDP was very lesser, the amount which was collected in the form of compensation cess was lower than the revenue losses incurred by the states. And that is the precise reason the government borrowed during that period, used it to pay for revenue losses incurred by the states. But somebody has to repay this borrowing. Center has taken the loan, somebody has to repay it. So central government says, after June 2022, I will continue to impose compensation cess, collect it. But I will not use the money to pay for the states. I will use the money to repay the loans. That is the whole idea of the compensation cess, etc., etc. Okay? Done? Right? Some of you are saying, but I don't see any compensation cess. My dear, purchase a car. Go to the market, purchase an SUV. Then see whether there will be a compensation cess or not. Because you are not listening to the lecture very carefully. Did I say on every product compensation cess is applicable? Think of it. Did I say on every product compensation cess is applicable? No. I said within 28% slab, some of the goods have been identified. For example, tobacco products, aerated beverages, luxury products. If you purchase those, there is a compensation cess applicable. Okay, let's start. Now, next point I want to discuss is the concept of multiple tiers, multiple slabs, or multiple rates of GST. Understand the reason here, right? Understand the logic behind this. Before GST was implemented, we had multiple indirect taxes. Any problem with this statement one? I'll repeat. Statement one. Before GST, there were multiple indirect taxes. Central government had multiple indirect taxes. States, right, had multiple indirect taxes. Now, after the GST was implemented, these multiple indirect taxes have been subsumed under one heading, that is a concept of goods and services tax. But under GST, what we have done, we also have 5%, we have 12% GST rate, we have 18% GST rate, we also have 28% GST rate. What is the reason? Why did Government of India not have, let's say, only one rate of GST? Don't you think having one rate of GST makes more sense? Let's say all the goods and services which are covered under GST, only 15%. Right? Don't you think that makes more sense? But why? Why is that? Government of India has opted for multiple GST rates, not only one or two GST rates. Now, these are the reasons. Let me give you the reasons in favor of the multiple slab structure and what are the concerns or disadvantages related to multiple slab structure. Point number one. Think of this very carefully. There are two products. One is Audi car and the second one is Paragon slippers. One is Audi car, second one is Paragon slippers. A simple question to all of you. Is it fair to have same rate of GST on both of them? I'll repeat it. Is it fair to have same rate of GST on both of them? Does it make any sense to you? Should we have only one rate? Answer is simply no. We should not have the same rate on both of them. Reasons are multiple. What are the reasons? One, don't you think these goods, some of them are consumed by very rich people and some of them are consumed only by poor people, or let's say middle income as well as lower income households? For example, Audi car. Who will purchase Audi car? Do you think a common man such as, right, you and me, assuming you are a common man, right, mango people, will be able to purchase Audi cars? Audi A3, Audi A8, Mercedes, Maybach, etc. Absolutely no. Right, so the rich people, it's a luxury product. The rich people will be purchasing it. Now, when the rich people have so much amount of money, they are purchasing Audi car, let them pay more taxes. They will pay it. They don't have any problem. They will pay more taxes. Can we apply the same logic to Paragon slippers, Hawaii chappal? Absolutely no. These are purchased by very right poor people. These are purchased by a common man. Can we impose the same rate of GST on Paragon also? Absolutely no. Right? That is one important point. Second very important point, if I have only one rate of GST, imagine on Audi car also as well as Paragon chappal also, I will have 15% GST rate. Simple example, I will have 15% GST rate. Now tell me, on a common good such as Paragon chappal, day-to-day consumption goods, etc., if I have a GST rate of 15%, will it not contribute to inflation? Think of it. Will it not contribute to inflation? Right? Will the market prices increase or not? Of course, yes. Will it contribute to inflation? Yes. That is a problem. Now, some of you will basically say, in that case, sir, don't keep it 15%, keep it 5%. Don't keep 15%, it will contribute to inflation. Let's keep it at 5%. Then, my dear, what will happen to government tax revenues? What will happen to the collection of government revenues? Government revenues will automatically fall down. Is the logic okay? Right? And don't you think if you have the same rate of GST on a luxury product, that is very costly product, as well as a common product, the tax will become more regressive in nature? I'll repeat the statement. Right? Don't you think for a very luxury product, you have the same rate of GST, and right, for other products also you have the same rate of GST, common goods which are used by common man. That is basically a regressive taxation system. So citing all of these reasons, Government of India said, then let's do one thing. Based on the product, we will have different rate of GST in India. Based on the product, we will have different rate of GST in India. Now, some of you are trying to do PhD on this. I know you, I'm looking at the comments. So some of you are trying to do PhD. Sir, why only 5%? Why not 2.5%? My dear, I'm telling you the same thing. Would you want to collect the sufficient amount of revenue or not? Tell me a very simple question. Would you want to collect a sufficient amount of revenue or not? In order to have a sufficient amount of revenue, not to incur losses, it was decided, okay, let me have 5%, let me have 12%, let me have 18%, as well as 28%. Right? There is a term called as revenue neutrality. I'm pretty sure some of you will start typing in Google and would have already come across the term revenue neutrality. What is the meaning of the term revenue neutrality? Please understand the logic here. You already have certain tax structure. You have certain tax system. You want to shift to a new tax system. So whenever you will shift from one taxation system to another taxation system, you should not be incurring revenue losses. Is it okay? What is the meaning of the term revenue neutrality? Whenever you shift from one taxation structure to another taxation structure or a new system, you should not be incurring any revenue losses. That concept is called as revenue neutrality. Okay, so keeping in mind all of them, Government of India decided 5, 12, 18 and 28. In fact, there are many more slabs. I'm not writing all of them. There is 0% tax rate under GST. There is 0%. There is a 1% GST rate. There is 3% GST rate. There is 5% GST rate, etc. Right? A 6% also is there. But should you remember all of it? For civil services, do you need to remember all of them? No. Simple waste of time. Okay, so these are some of the reasons why we have decided multiple rates will be used. Now, second set, if you have this system, if you have this multiple rates of GST, what is the problem then? Just now we have basically decided because of these reasons we should have multiple rates. But now if you have multiple rates, what is the problem with multiple rates? Point number one. Tell me a very simple question to all of you. The central theme of GST is one nation, one indirect tax. Will these rates be a justification to that central theme of GST? I hope you understand this. Think of it very carefully before you start answering. Think of the statement very carefully. GST central theme is one nation, one indirect tax. But under GST, what we have is 5, 12, 18 and 28%. Does these multiple rates, do they justify the central theme of GST? Answer is simply no. Right? Answer is simply no. One rate of GST. Right? Because if you look at multiple countries, some of you might be under the impression that India is the only country to have GST. Some of you might be thinking that. Absolutely no. In the world, there are more than 150 countries who have implemented GST. Is it okay? In the world, there are more than 150 countries who have implemented GST. And in large number of countries, either they will have one rate of GST or two rates of GST. Is it okay? Is my point making any sense to you or not? In most of these countries, they will have only one rate. One rate means all the goods and services will have one rate. And second, they will have two rates or maximum three rates. But in case of India, just now I told you 5%, 12, 18, 28, 28% plus cess, right? 1% is there, 3% is there, 6% is there. Now you tell me, will this structure justify the central theme of the GST? No, it doesn't justify the central theme. It is opposite to what the central theme is actually trying to focus upon. Right? That is one point. Second point, many of you look at it and say, right, sir, it is required. Right? Just now you have told it is required, etc. But there are a lot of administrative difficulties. There are a lot of administrative difficulties. Right? What is this administrative difficulty I'm talking about? I'll start with one more concept here. There is a concept called as inverted duty structure. Inverted duty structure. Understand this concept very carefully. But before that, let me ask you a very simple question. Imagine you're a manufacturer. Your friend is back. You're manufacturing this bottle. Government says, whatever taxes you pay on the input, I repeat, government says whatever taxes you pay on the input, government will give it back to you. But understand the logic. Next point is important. Understand the point here. Government will say, let's say, take 30 days to provide the input tax credit to you. Now, I'll give you two examples. Think of it very carefully and answer this. In the example one, you will purchase certain raw material. You will pay 10 rupees a tax. Government will take 30 days to return it back to you. In the example 2, you will purchase same raw materials and you will pay a tax of 12 rupees. Government will take 30 days to return it back to you. Now, please tell me, if you are the manufacturer, would you prefer example 1 or example 2? I hope you understand the logic behind this. Some of you are saying example 2. Also tell me what is your argument. Because I'm at least happy most of you are saying example 1. The reasoning being, please look at the example, understand the example very carefully. You're a manufacturer, you'll purchase raw material, you'll pay a tax of 10 rupee, government will return the 10 rupee after 30 days. Second, you'll pay a tax of 12 rupee, government will return it after 30 days. You will get the money. There is no doubt, you will get the money. But don't you think, compared to example 1, in example 2, 2 extra rupees of yours, 2 more rupees are getting stuck up in the system. Let me know. In the example 2 compared to example 1, extra 2 rupees of yours, right? Extra additional 2 rupees for 30 days, they will not be with you. It will be there with the government. So you want to give 12 rupees with the government for 30 days rather than giving 10 rupees to the government. I hope you understand the logic behind this. And some of you are wonderfully asking, this is a very great question. Why is the government giving the 10 rupee tax back? My dear, have you not attended yesterday's class? What is this idea of an input tax credit? What is this idea of an input tax credit? Right, the bedrock of GST is input tax credit. And now the question is, why will the government give the tax back? Because there is a concept called as input tax credit. Okay, please revise. It simply shows that you are not revising. Please revise. Now, is the logic okay with all of you? Anybody has a problem? I will simply say example 1, you would prefer to be under example 1 compared to example 2. Now, why I'm discussing all of this? Why all this story is required? Because there is a problem with case of taxation in India, which is called as inverted duty structure. Now, what is this idea of an inverted duty structure? Please understand this carefully. Generally, what happens? Generally, if you remember the calculation also yesterday, generally what happens? You purchase the raw materials, you produce a good and sell the good in the market. Done? You'll purchase a raw material, right, or an intermediary good. You'll produce the final good, sell the final good in the market. If you remember the examples very carefully yesterday, whatever taxes you pay in the step 1, whatever taxes you pay in the step 1 is generally smaller compared to taxes paid in the step 2. Do you remember this? Right, I hope you remember this example because this is basically required to understand inverted duty structure. If you remember the numbers, in the step 1 you would pay 10 rupee tax. In the step 2 there will be 12 rupee tax, even under the VAT system. I am talking about VAT system. Right, in the step 1 you will pay 10 rupees. In the step 2 you will pay 12 rupees. This is generally what is observed. But what happens in case of inverted duty structure? What will happen in case of inverted duty structure is, understand the problem here. Same example I'll take. Raw material, right? Let's say you will sell the final good in the market and you will purchase, right, certain raw material from another seller. In the inverted duty structure, the tax you pay in the step 2 will be lower than what you pay in the step 1. Any difficulty here? The taxes that you pay in the step 2 will be greater, not smaller, will be greater than whatever taxes you have paid in the step 1. This is called as inverted duty structure. This is referred to as inverted duty structure. And some of you will ask, it is not possible. Some will simply say, no sir, that is never possible. I'll prove it. Let me take a very simple example. Imagine the cost of raw material is 100 rupee. I'll show you the calculation. Please do not by heart calculation. Imagine cost of raw material is 100 rupees. You will purchase this raw material. The tax rate is 18%. Tax rate is 18%. Now you will purchase the raw material, produce a good, sell it in the market. Let's say tax rate is 5%. Tell me, whatever taxes you pay in the first step, will it be greater than taxes collected in the second step or not? Take any number for that matter. Take the numbers and calculate, but UPSC will not ask you all of this. Don't waste your time. I'm just proving it to you. Right? Whatever taxes you pay in the step 1 will be greater than whatever tax you collect in the step 2. This system is called as inverted duty structure. IDS. Inverted duty structure. Now please look at both the examples, example 1 and example 2. Now can I conclude that because of inverted duty structure, more of your taxes will be stuck up with the government for a longer period? Let me know. Please compare example 1 and example 2. That should be more than sufficient. Do not do PhD here. Please look at example 1 and example 2, more than sufficient. Because of inverted duty structure, more of your money, and mind you, please remember this, the money you have is very precious. As a manufacturer, you do not have unlimited amount of money. Is the logic okay with all of you? You don't have unlimited amount of money. In the first step, 10 rupee was stuck up with the government for 30 days. In the second step, 15 rupees is stuck up with the government for 30 days, which means extra 5 rupees. Your extra 5 rupees is there with the government for 30 days, which means you will not be able to have those 15 rupees for 30 days. Right? Don't you think you will face issue related to money that you have? What if already the money that you have is very limited? You're working with a very limited capital, that is the amount. Then basically more and more amount will be there with the government till they will process the input tax credit because of inverted duty structure. Now I'll add one more point here. If there was only one GST rate, will there be inverted duty structure? Think of it. If there was only one, right, GST rate, 18%, only 12%, only 10%, will there be inverted duty structure? Of course no. Some of you are saying yes. How is that possible? Those who are saying yes, it is an indicator that your CSAT is very bad, my dear. Your CSAT is very, very bad. It will never be, right, having an inverted duty structure. The reason is very simple. Imagine 10% at step 1, 10% at step 2. Don't you think when you purchase the raw material, the price of the raw material will be smaller compared to the final good price? Think, apply certain logic, you will understand it. You will purchase 100 rupee raw material, you will manufacture the bottle, will you sell the bottle at less than 100 rupees? How is that possible? Will you sell the bottle at 100 rupees? No. Automatically will sell the bottle at 120 rupees, 130 rupees, 140 rupees. So if you calculate 10% of, let's say, 140, 10% of 100, right, automatically you will realize that there is no inverted duty structure. Now those who are finding it very difficult because your calculations are bit weaker, etc., etc., you don't have to buy hard calculations. Be happy. You do not have to be worried about calculations. What you simply need to understand is this. Let me put inverted duty structure in a statement. The taxes that you pay when you purchase the inputs is greater than the taxes that you collect when you sell the output. Is it okay? I'll define it again. Let me know. Right? The taxes that you pay when you purchase the inputs is more, it is higher compared to the taxes that you collect when you sell the output. That is basically inverted duty structure. And some of you are asking, sir, how is that possible? Doesn't government know that this is happening? My dear, government knows it. Government knows it. But here is the problem. Let me know. The plastic that is used in manufacturing of this bottle can be also used in manufacturing slippers or not? Think of it. Just apply, right, certain knowledge, you'll understand. The raw material, that's a plastic. Plastic that is used in manufacturing this bottle can also be used in manufacturing chappals, Hawaii chappals. Right? Answer is yes, by the way. Some of you are saying no. Then you have not even seen slippers then. Can be used in manufacturing slippers also. What if this bottle is taxed at 18%? Bottle is taxed at 18%. right? The plastic is taxed at 12%. Hawaii slippers are taxed at 5%. Tell me, will there be inverted duty structure or not? Is it okay? Will there be inverted duty structure or not? Yes, automatically there will be a problem of inverted duty structure. That is the problem. That is the problem. Raw material is not just limited to only one product. If you knew that this raw material is used only in one product, I can ensure there is no inverted duty structure. But because the raw material or intermediate good is used in multiple goods, how can I decide, right, what should be the rate where? Automatically, there will be inverted duty structure because of it. Done. So, because we have multiple rates of GST, it will lead to administrative difficulties such as inverted duty structure. Done. Right. In fact, I'll tell you one more story. Don't use it for UPSC, not required. I'll tell you one more story. When there was introduction of the GST like this, in many of the cases, there was so much of confusion. Why there was a confusion? Have a look at this. All of you heard of a delicacy is a name, a sweet by the name of Barfi. Bareli ki Barfi, right? This Barfi, that Barfi, etc. Right? Again, I'll tell you an interesting, right, anecdote here. Right? Don't use it in UPSC. If you see the Barfi, there is not just one variety of Barfi. There are multiple varieties. That is, one will be a plain Barfi. And then you also have a Barfi with the silver foiling on it. You will have a small layer of silver on it. You will also have a Barfi with a chocolate layer on it. And you will also have a Barfi with a dry fruit sitting on it. Yes or no? Different varieties of Barfis are there. But when the GST was introduced, this is interesting. When the GST was introduced, on a plain Barfi, we had a different GST. We had a different GST on a silver foiled Barfi, and a different rate of GST on a chocolate Barfi, and a different rate of GST on a dry fruit Barfi. Now tell me, is it not a single product, by the way? And the argument was there. Argument in favor was there. But imagine the confusion that it will create in the market. You are the bakery owner, you are the owner of this confectionery. Imagine the kind of confusion that it will create in your mind, the kind of accounting that you will have to follow, etc., etc. So that's the reason I said having one rate administrative wise, it is good, right? Because these kind of difficulties you will not face. Now, please understand this, right? That's the reason there are two arguments here. We should have only one rate and we should have multiple rates. But what does the government of India say? What does the government of India say? Government of India says, this is the structure we have already implemented. We will try to reduce the number of GST rates. We'll try to reduce the number of GST rates. And that is where some of you will think that whatever recommendations you are giving are very rational, etc., etc. But understand this very carefully. There was one recommendation that was given to government. There is a 12% GST rate. There is 18% GST rate. Okay, there is a 12%, there is a 18%. The recommendation was you can simply take both of them, 12 and 18%. You can have only one rate, 15%. And most of you, after looking at this, right, you will basically say, your CSAT brain will say, absolutely correct. Wonderful recommendation, but it is not feasible. This recommendation is not feasible. I'll tell you why. Imagine under 12%, 100 crore worth of goods and services are sold. What will be the amount of revenue you will collect? 12 crore rupees. And under 18%, another 500 crore rupee worth of goods and services are sold. How much will be your GST revenue collection here? 90 crore rupees. Simply 90 crore. What is the total? 102 crore rupees. So as of now, 12% and 18%, you are able to collect 102 crore rupees. Now your recommendation is, sir, right, I've used a calculator, I've used a mobile, I've added 12 plus 18, and I've divided it by 2 and the calculator says 15%, let's go with 15, that's the average. But look at the loss of revenue for the government. 15% on 100 plus 500, 600 crore rupees. 15% GST rate on 600 crore rupees. What will be the revenue you are going to collect? The revenue you are going to collect will fall down from 102 crore rupees to 90 crore rupees. Right? So don't you think it's a revenue loss for the government? If you simply merge 12 and 18%, will there be a revenue loss or not? Answer is yes. And that is the precise reason why Government of India so far has not merged 12 and 18%. And this is the reason, this is the precise reason why they have not merged 12 and 18%. But what is the way forward then? What is the way forward? There is one authority, one institute by the name of NIPFP. There is one institute by the name of NIPFP, National Institute for Public Finance and Policy. Very, very famous, of course, for economics. It functions under Ministry of Finance. Now, what is the recommendation of NIPFP? Please follow this carefully. They recommend that 12 and 18% slabs should be merged. The 12 and 18% slab should be merged. But now again you will put the same argument, sir, revenue losses. So they will say that merge 12 and 18%, it will lead to revenue losses. And on the other hand, what you can do is, you can increase 5% to 8%. You can increase 5% to 8%. You can also increase 28% to 30%. Understand the recommendation here and use these kind of recommendations. Believe me, when you use these kind of recommendations, you will automatically score more marks. What is the recommendation? Merge 12 and 18, have 15% slab. Have a 15% slab. Now again the argument is, sir, but the revenue loss will be happening for government. For that, their recommendation is increase from 5% to 8% and 28% to 30%. Rather than having 4 GST rates, now we will have how many GST rates? We will have 3 GST rates. Did we reduce the number of GST rates? Of course, yes. Did we ensure that we are not going to incur any revenue losses? Again, the answer is yes. This can be given as a recommendation of rationalization of GST structure. Rationalization of GST structure. Any difficulty here? What is the long form of NIPFP? National Institute for Public Finance and Policy. National Institute for Public Finance and Policy. This is a recommendation of NIPFP, and trust me, all of them are experts. Use it as a recommendation in your paper. Right now, some are asking then why are we not implementing it? The recommendation is there, but argument is 5% to 8%. Don't you think some of the goods and services which are consumed by the poor people will cost more now? Think of it. Some of the goods and services which are consumed by the poor people will start costing more. That is one concern. Second concern is, what if it is a raw material? Right, you're charging a 5% GST rate on a 5% GST rate of 5% on a raw material. Now you will have to increase it to 8%. Can it trigger inflation in the market? Can it trigger inflation in the market or not? Right, of course, yes. So government can not simply take it and start running with the recommendation and implement it. There are a lot of concerns that they will have to address. But again, this is a recommendation given by an expert institute. You can use it to give it as a way forward in the UPSC. Because many of you, if they ask you in the interview, right, I hope you have read the newspapers. If they ask you in the newspapers, if there are so many problems in the GST, what will you do? You as a civil servant, you will simply answer, so let's withdraw GST. We have struggled for last 2.5 decades to introduce GST. Your logical argument is, if there are so many problems with the GST, let's remove GST. let's go back to earlier structure. That is not a rational explanation, never a rational example for it. Okay, done. So this is a discussion regarding the structure of GST in case of India. Shall I go to the next one here? What is the difference between the old old taxation structure and new taxation structure? Let's start. In the old method, goods and services are taxed separately. Different indirect tax on a good, different indirect tax on a service. But now under GST, there is no difference between a good and a service. All these goods and services are taxed under only one head, that is GST. In simple terms, this bottle, which is a good, can be taxed at 12%. A service can also be taxed at 12%. There is no difference between a good and a service under GST. Second one, earlier, different state governments had different rate of taxation. For example, if this bottle is sold in, let's say, Punjab, they will have, let's say, 15% VAT. Same bottle sold in Uttar Pradesh, 18% VAT. Same bottle sold in, let's say, Karnataka, 13% VAT. It would vary from one state to another state. Under GST, it will not happen. Throughout India, right, only one rate of GST. National market is possible. That's the third point. National market is possible under GST. Before GST, that was not possible. Fourth one, in the old taxation system, there were taxes which were taxes on production, origin-based taxes. And the origin-based taxes could lead to cascading effect. But the GST, it is a tax on consumption, that is a destination-based tax. Whatever taxes are collected, at every step there is an input tax credit. There is no cascading effect. The state where consumption happens will get the SGST. Next, right, in the old method, cascading problem was there. Under the GST, there is no cascading problem. Now let me explain how GST will work out. How GST will work out when you talk about intrastate as well as interstate. Now if you ask me, please understand this carefully. If you ask me, please do not by heart this calculation. Please do not by heart this calculation. UPSC is not going to ask you this calculation. And understand the logic here. All you need to understand is how GST is better compared to earlier taxation system. Let's start. Imagine it is intrastate. Intrastate means what? Within the same state. Production happens in the same state. Consumption also happens in the same state. Let's start. Whenever it is sold from A to B, let's say price is 1000 rupee, and imagine the service tax is there at 10%, that will be 100 rupee, and the total cost would be how much? 1100 rupees. Right? Imagine I'm A, I will sell it to you. You will pay how much? 1100 rupees, including a tax of 100. Now this service tax will go to center. Simple idea. This service tax will go to whom? Central government. Now what will happen? Have a look at this. The B will use this product, or let's say a service, and manufacture a final good or a service, sell it to customer. Now cost price for you will be how much? 1100. You want to earn a profit of 1000 rupee. Total market price or the selling price will become 2100. And please understand this carefully. Some of you will ask me, sir, why am I including the tax of 100? A simple question to you. You are selling it to customer. What is the tax applicable? You are selling it to a customer. What is the tax applicable? VAT. And earlier, what is the tax you have paid? Service tax. It has gone to whom? Central government. Now, simple question to you. Service tax is collected by the central government. You will have to pay VAT to the state government. Will you get input tax credit? Think of it. Right? We have discussed all of this yesterday. You have paid a service tax which has gone to central government. Now you are paying VAT to the state government. Do you think the state government will give you ITC of 100 rupees? No. So what you will do? You will include 1000 rupee, that is the cost of the product, plus 100 rupee service tax plus 1000 rupee your profit. And the VAT will be, let's say, 10%. 10% of 2100 will be 210 rupee. The market price will become 2310 rupee. Now, question number 1. Is there cascading effect in the example 1? Think of it. Is there cascading effect or not? Point number 2. The burden of this huge amount of a tax, it is falling on the customer. Market prices are very high. Now let's start how GST will work. How the GST will work? First step, nothing will change. Price is 1000 rupee. You will pay a GST of 10%, that is 100, right? 10% of 1000 is 100. You will purchase the product at 1100 rupee. Now you want to manufacture this final good and sell it to a customer. Unlike earlier situation, you will not count the whole 100 rupee tax when you're deciding the selling prices. You will not be counting the taxes that you have paid on the inputs. Why? Under GST, I told you, whatever taxes you have paid on the input will be credited back to you. Is it okay? You are the manufacturer. You have paid a GST of 100 rupee when you purchased a raw material. Government is telling you, I will return the 100 rupees to you. I will give the credit of 100 rupees to you. Will you transfer it to customer? No, you will not transfer it. So what is the cost price of the product? Raw material, 1000 rupee. You want to earn a profit of 1000 rupee. Your selling price will be 2000 rupees. Your selling price will be 2000 rupees. And GST of 10% on 2000 rupees will become 200. Customer will pay 2200. You will keep 2000 rupees. Transfer this 200 rupees to government. Simple. You will transfer this 200 rupees to the government. Now please understand the next point of calculation. Government in the step 1 has received 100 rupees and step 2 has received 200 rupees. This 100 rupee will be credited back to you. Simple. That 100 rupee will be credited back to you. Which means what? Government has totally collected, after giving the ITC, 200 rupees. Government has collected 200 rupees. Now when government has collected 200 rupees, please divide this 200 rupees into two parts, 100 rupee and 100 rupee. The 100 rupee will be CGST, will go to central government. The 100 rupee will be SGST, will be given to the same government, that is the same state, because it is intra-state sale. Because it is intra-state sale. Any difficulty? Under GST, please have a look at it. Is there cascading effect? Point number 1. Is there cascading effect under GST? No. Right? Is the tax burden under GST on the customer less or not? Answer is yes. Right? Will the central government get half of the GST collection? Yes. Will the state government get remaining half of it? Yes. Right? That is the basic idea of a GST. And you will see that under GST, input tax credit. Input tax credit, right, will basically be provided here at every step. Any problem in understanding this? Do not by heart. Don't waste your time. Do not by heart. What is the result here? Compared to earlier system, GST is much better. Compared to earlier system, GST is much better. No cascading effect and input tax credit is provided, etc. Shall I go to the next point here? Is it more complex? No, my dear. Earlier it was very complicated. That's the reason you people are not revising. That's the reason you feel everything is very complicated. Earlier, service tax was there. Sales tax was there. VAT was there. I told you yesterday, right? Around 40 types of indirect taxes have been merged under GST, have been brought under GST. What would you prefer as a manufacturer? What would you prefer? Think of it. Right? This is the reason students generally find it very difficult, because you don't right revise anything. Right? I believe you have a chip inserted in your mind God will come directly update it in the chip. If you remember earlier, I told you there were different indirect taxes. Different indirect taxes at the central level, at the state level. And at the state level, again, there were different indirect taxes. Now under GST, all of these have been taken. You have only one GST. Which is better? This is better for you, or this is better for you? Think of it. Right? Idea of ease of doing business. Right? Idea of ease of doing business. Okay? Done. So this is basically the idea how GST is better compared to earlier system. Any difficulty here? Can I go to the next one? Can I go to the next one? Okay. Next. Now under the interstate. Under interstate. What do you mean by interstate? Do you remember yesterday I told you inter means between, right? And intra means within, right? Imagine state 1, state 2. I am there in the state 1. I will manufacture something, give it to you. You are sitting in the second state. Price is 1000 rupee. Central sales tax 10%, 100 rupee. You will pay 1100 rupees and you will purchase the good. Now that 100 rupee will go to whom? It will go to state 1. It is the state 1 which will get the central sales tax. Now you will use this product, right? Let's say raw material, etc. You will produce a final good, sell it to customer in the state 2. Now automatically the state 2 will have a VAT of 10%. We have discussed same example I'm taking. Right, so you want to earn a profit of 1000 rupee. You have purchased a raw material at 1000, but you also have paid CST of 100 rupee. Input tax credit, you will not get it from state 2. So automatically the cost price will be 1100, profit of 1000 rupee, selling price will be 2100, and VAT of 10%, 210 rupee, final price paid by the customer will be 2310 rupees. Same logic. Is there a cascading effect here? Is the burden of taxation very high on the consumer? Answer is yes and yes. Come to the GST. How GST is better compared to earlier system. First step, I will sell the raw material to you. I will sell the raw material to you. You are sitting in the state 2. Now please understand, because it is interstate, I will use IGST. Because it is interstate, I will use IGST, integrated GST. Let's say integrated GST of 10%. So you will purchase the raw material. You will also pay IGST of 100. Now you will use this raw material to manufacture a good, sell it to the customer who is there in the same state. Point number 2, although you have paid IGST of 100 rupee, you will get it in the form of input to tax credit. Is the logic okay? You have paid IGST of 100, no doubt. You will get the input to tax credit. So what you will do? You will simply count the cost of raw material and also add profit of 1000 rupee, and you want to sell the product at 2000 rupee to the customer. And again, the government will impose a GST here. Don't say IGST, because you are selling to the customer of the same state. Right? GST of 10%, that will be 200 rupees. What is the final price here? 2200 rupees. The final price is 2200 rupees. Or else, if you want to understand, let's assume the customer is there in the state 3. Let's say the customer is there in the state 3. Then what is IGST? Let's say IGST of 10%. How much will be collected? 200 rupees. Now follow the sequence here. In the step 1, government of India has collected, or let's say government has collected 100 rupee IGST. In the step 2, government has collected 200 rupee IGST. This 100 rupee will be credited back. Simple. It will be given back, credited back to, right, manufacturer, that is you. So how much has the government collected totally under these 2 steps? Right, 200 rupees. Now divide this 200 rupees into 2 parts. Divide this 200 into 2 parts. Right, that will be 100 rupees as well as 100. This 100 will be CGST and this 100 will be SGST. Now CGST anyways will go to the central government. What about this SGST? Who should get this SGST? Should the state 1 get the SGST, state 2 get the SGST, or the state 3 where the customer is there, should the state government 3 get the SGST? Because the customer is there in the state 3, it is the state 3 which will get 100 rupee SGST. Is the logic okay here? Is the logic okay? Right? This is how GST system has been implemented. And you will realize that, right, there is no cascading effect under the GST. Right? The state where consumption will happen, that state will get, right, the that will get the SGST component. Right? That is basically the idea of a GST application under intrastate as well as interstate. Intrastate as well as interstate. Any difficulty here? And again, my advice to you, right? My advice to you is don't by heart calculations. You're simply wasting your time. If you start by hearting calculations, better go write chartered accountant exam. Don't write UPSC, because UPSC will never ask you these kind of examples. Okay? Let me go to the next. Any problem here? Any problem? This is how GST is going to be implemented. Now, some of you are asking, what will happen to state 1, state 2? States will lose revenues under GST, etc., etc. That is a very narrow viewpoint regarding GST. Right? That is a very, very narrow viewpoint regarding GST. Why? The example that I gave, you have taken that example and you're simply running with that example, assuming every time the same thing will happen. Argument is, state 1 will produce the bottle will be sold in the state 2. Is the logic okay? This is the example I'm giving. Right? Or else, let's say the bottle will be consumed actually in the state 3. Okay? This is the example I took just now. I said SGST component will go to state 3. And your conclusion, right? Your conclusion is that, sir, in that case, S1 and S2 are incurring losses here. There is no advantage of GST for S1 and S2. My dear, two very important points. Point number 1. Imagine the good is manufactured in Maharashtra, or let's say I'll take the same example that I took yesterday, Bihar. Imagine this bottle is manufactured in Bihar. Simple question to you. Do you think all these bottles will be sold outside Bihar only? Think of it. Right? Because you have taken one example and you have started running with that example only. Right? Do you think whatever bottles are manufactured in Bihar, everything will be sold outside Bihar? If you say yes, then I will agree. Right? GST is not providing any benefit to Bihar. But tell me, reality, will it happen? Of course no. So whatever is manufactured, some of it will be sent outside Bihar and remaining will be consumed within Bihar. So when it is manufactured in Bihar, consumed within Bihar, who will get SGST? Who will get the SGST? It is the state government of Bihar who will get the SGST. And point number 2, imagine this remote is manufactured in UP. I hope you understand. Imagine this remote is manufactured in UP. It will be sold in Bihar now. Who will get SGST? Right? Don't you think SGST will be consumed by, or SGST will go to Bihar? So your argument, right? Your argument is because the goods are moving from one state to another state, the first state where manufacturing happens, they will not get anything. How is that correct? If something is manufactured in Maharashtra, will it not be sold in Bihar? Of course, yes. If something is manufactured in Bihar, will it not be sold in Maharashtra? Again, the answer is yes. Right? That is the reason. Please understand this very carefully. Right? Basically, the idea is, yes, the state where consumption happens will get the SGST. But do not make your assumptions or conclusion only on one example. Right? Because S1 can be Bihar, S1 can be Maharashtra also. right? So the states, right, production will happen, consumption might happen in the same state or in a different state, right? SGST will be given to the state where consumption happens. Can I go to the next point here? Can I go to the next point? Right? Now again, some of you are trying to do dissection of every calculation that I'm doing. I don't want to enter into all of this calculation, but please understand the logic. This is a very, very beautiful concept. Most of you will simply say, no, this is very, very complicated, but trust me, this is a very, very beautiful concept. How? Let me prove it. What is the total value of the goods which are produced? Take GST here. Please look at the GST example. Tell me, what is the price? What is the price of a final good which is produced in the market? Don't talk about GST here. Simply look at what is basically the value. Can I say that? Arey Baba, forget about, right? Some of you are looking at pre-GST. I'm saying look at GST. What is the value of the good? In the first step, raw material cost is 1,000. In the first step, raw material cost is 1,000. And in the second step, what are you adding? How much value are you adding to this raw material? Another 1,000 rupees. Is the logic okay? Another 1,000 rupees in the step 2. Total value addition to the system is how much? Gross value addition. I hope remember that concept. Total value addition done to the system is how much? 2,000 rupees. And please have a look at how much is the tax totally collected by the government after providing input tax credit. Please look at, I'll repeat the statement. Please look at what is the total tax collected by the government after providing input tax credit. Right? Government will collect 300, but 100 rupee will be given back. How much is collected by the government? Actually, 200. Now, please calculate 10% tax on the value addition. Please calculate 10% tax on the value addition. Is it not 200? Think of it. Is it not 200? 10% is the tax, right? Although we have imposed the tax at two different steps, is the tax not 10%? Yes, 10% is the tax. And how much is the value addition done to the system? 2,000 rupees. 10% of 2,000 is what? 200 rupees. And that is exactly what the government of India, or let's say the center as well as the state, have collected in the form of taxation. Right? Is there any double taxation? What does it mean? Is there any double taxation in the system? No. On the value we are collecting tax, is there possibility of any double taxation? Absolutely no. Right? That is the beauty of these tax systems. But UPSC will not test you here. This is more of the optional papers. This is more of a discussion on the lines of optional paper. UPSC, trust me, will not even ask you these calculations. Okay, done. This is how GST is much, much better system compared to earlier system. Right? So next, the idea of a GST network. Idea of GST network. GSTN, that is a GST network. Now, what do you mean by GST network? Understand the logic here. Government of India set up one authority which will provide lot of facilities for all the people, all the companies who are there in the GST system. Right? I'll repeat the statement here. Government of India has set up one authority. Right? One authority. The name of the authority is a GST network. And what is the role of the GST network? Imagine you are running a company which will manufacture bottle. Under GST, you will have to be registered. Everybody will agree with me with this point? Under GST, you will have to be registered. If you do not know, sir, what is this idea of a registration? If you have any bill, I repeat, if you have any bill which you have got very recently from a shop, please open it. Please open the bill. And you will see in the top, right after the name of the shop, etc., you will see GST registration number. Check it. Please check it. Right, you will see a GST registration number. Now, who will provide the GST registration number to the taxpayers? Who will collect GST money and distribute it between center and state? Who will collect all the receipts from you? right? That is how much money you have paid in the form of GST when you purchase inputs, right? How much input tax credit you're supposed to get, etc., etc., etc. All of this supporting service is provided by GST network. All of this, right? Infrastructure backbone. It will provide all this back end, right? Support of infrastructure, that is the GST network, right? The taxpayer profile analysis, registration of the taxpayers, filing of the returns, etc. All these are the services which are provided by the GST network. Okay. Point number 2, it is a non-profit organization. It is a non-profit organization. What is the meaning of the term non-profit? Let me ask you a very simple question. Imagine you're a crorepati, billionaire. You will invest and set up a bottle manufacturing facility. Who will take the profits that is earned by this company? Think of it. Who will take all the profits that the company will earn? You will take it. Because you have invested, you are the owner. But what if I say, whatever you have invested, you have generated profit, profit will not be given to you. Profits again will be invested back in the business. I hope you understand the logic here. Right? You have invested money, you have set up a company, you started a business. But whatever profits are generated, you will not get any of those profits. Again, they'll be invested back into the business. Owners will not get any profits. That is the concept of non-profit organization. Can I give you an example? Charitable institutions. Charities. By the virtue, when you say charity, by the virtue, whatever earnings that the charitable organization does, owners of the charities are not supposed to take it. They are supposed to reinvest it again in the market, again in the business, again in the services. That is the concept of non-profit organization. Any difficulty here? Any difficulty? It is also referred to as Section 8 company. It is also referred to as Section 8 company. Under the Companies Act of 2013, this is called as Section 8 company. Okay. Next, it will provide IT infrastructure to all the stakeholders, all the participants. GST network ownership is about to change. This has been there in the newspaper for many, many years now. What is this GST network ownership? Right now, 49% of ownership of the GST network is equally between center and state. I'll repeat the statement. Right now, 49% of the GST network ownership is equally between center and state. 24.5% to the center, 24.5% to the states. Remaining 51% is held by other private sector entities. There are many private sector entities which are holding remaining 51%. Now, there is a proposal which was approved by the cabinet, that's the government of India, wherein they are saying that 100% I want the ownership between center and state. Rather than having, right, 49% with the government, 51% with non-government entities, government of India says, let me bring, right, 100% of this with the government only, 50% with the center, 50% with the states. Right, this is a point which has been there in the newspapers, but I don't think so. I've checked it last month. The ownership has not changed. Okay, so this is basically the concept of, right, GST network. Now there is a question on this GST network. Do they pay dividend? My dear, dividend is basically part of the profits earned by the company. If it is a charitable organization, if it is a non-profit organization, no, it will not provide any kind of returns. Okay, next, anti-profiteering measure. Interesting concept. Understand this carefully. Interesting. What is this idea of a profiteering, anti-profiteering? Let me explain it to you. Imagine you're manufacturing this bottle. Okay, rather than you, let's assume I am manufacturing this bottle. Right now, the actual cost of the bottle is 100 rupee. Okay, actual price of the bottle is 100 rupee. And, right, understand the next point here. Let's say GST rate is 12%, which means you will add 12 rupees and market price market price will become 112 rupees. Now, what if Government of India reduces the GST rate from 12% to 5%? Tell me, what if the Government of India, that is the GST Council by the way, will reduce the GST rate on the bottle from 12% to 5%? Can I say you will expect the market price to come down to 105 rupees? Any problem in this? You will expect the price to come down to 105. And if I do that, if I actually reduce the price from 112 rupees to 105 rupees, I'll use a technical statement. Understand this carefully. Is it okay if I say, when I reduce the price from 112 to 105, I have transferred the complete benefit of tax reduction. I have completely transferred the benefit of tax reduction to you. Benefit of tax reduction to the customer. Any problem in understanding the statement? Let me know. Any problem in understanding this statement? Which means with reduction in the tax rate, I've also reduced the market prices in the same manner. I'm not taking any advantage here. I've completely transferred the benefit of tax rates to you. But rather than this, rather than reducing to 105, what if I reduce the price to 108 rupees? I will reduce the price. Right? Government has reduced the tax rate from 12% to 5%. I'm telling you, you have come to the shop, I'm telling you, until now the price was 112 rupees. Now, because of the GST rate reduction, the price has come down to 108. Simple question to you. If the price is 108, is the statement applicable in this price? Let me know. Is the statement that is it right? Is it that I'm completely transferring all the tax rate reduction to you? Absolutely no. Some of you are saying yes. How? Think of it. No, at least think of it. If the price is, let's say, actual cost is 100, tax rate is 5%, then it should be 105. Have I reduced the price, market price to 105? No, I've reduced it to 108. I am providing certain benefit to you, but am I completely transferring the tax rate benefit to you? Is it a complete benefit transfer? Absolutely no. Which again means, right, have a look at this. If the tax is 5 rupee here, because the tax is 5%, tax is 5 rupee, can I say I've increased my price to 103? Is the logic okay? I've increased my price to 103. And can I simply say, I am taking an advantage. I'm taking an advantage of price reductions. I'm taking an advantage of tax rate reduction and thereby increasing my profits. I'll repeat it again. I'm taking the advantage of the tax reduction. I'm not transferring all the tax rate reduction to you. I will also take certain tax rate reduction advantage. And what is the benefit to me? My benefit is my profits will start increasing. Right? This practice is called as profiteering. This practice is referred to as profiteering. Because I understand this, as a customer, you will never come to know this. Because if you go to the market, tell me, will the MRP label be there on the bottle or not? Think of it and let me know. When you go to the market, will the shopkeeper give you the breakup of the bottle price? No, the shopkeeper will simply paste what is the MRP on this. And the shopkeeper says MRP is 108. Right? Tax rate has been reduced. Right? Market price also has been reduced. But now the shopkeeper is taking an advantage. Some of the advantage of tax rate reduction goes to the shopkeeper. Some will go to you. Right? This is called as profiteering. This activity is called as profiteering. A simple question to you. Should profiteering be allowed? Think of it. Should profiteering be allowed in the market? Right? Your answer should be no, sir. We should not allow profiteering. Again, some of you are saying yes. Those who keep on giving wrong answers, please listen to the lecture carefully. Should the profiteering be allowed? Answer should be no. Why should you allow profiteering? If the government is going to reduce the taxes, don't you think the customer should get the tax rate benefit? The shopkeeper should not get the tax rate benefit, customer should get the tax rate benefit. And that is the reason we should not allow profiteering activity. How can we take care of it? Right? This will happen in the market. How do we ensure it will not happen? That's the reason under GST, there is a provision called as anti-profiteering. Under GST, there is a provision called as anti-profiteering. And under the anti-profiteering, government has set up one authority, National Anti-Profiteering Authority, NAA, National Anti-Profiteering Authority. And what is the role of the National Anti-Profiteering Authority? You feel that a company, a seller, is not providing the complete tax rate benefit to you. You feel that as a customer. Take the bill, file a complaint with NAA. Simple. Take the bill, file a complaint with NAA, they will investigate. Or else NAA will also take up the cases by themselves. Have you heard of the term suo moto? Now this is right the difficulty in explaining these kind of concepts with the students. Students will forget about GST anti-profiteering, they will run behind suo moto now. Suo moto simply means on their own cognizance. Right? When they have an authority like this, they can take up the cases when you file a complaint, or else the anti-profiteering authority can also take up the cases on their own. If this authority feels there is a company, there is a seller, they're involved in profiteering, they can take up the cases by their own. Okay, so that is basically the idea of anti-profiteering measures. But let me add one more point here. There is a concept of sunset clause. Understand this carefully. There is this concept of sunset clause. What is the meaning of the term sunset clause here? Right, I'm pretty sure all of you must be having a let's say a packet of biscuits in front of you, or a chocolate right in front of you, or let's say a soft drink bottle in front of you. Just have a look at the bottle. There will be expiry date written on it. Yes or no? Or else even if you don't have it, don't worry. You must have seen this. There is expiry date, or else they will also write best before date. Best before date. Best before 3 months. Best before 7 days from the date of production. Expiry date, right? Let's say 1st of January 2024, like this. Now, what is the logic of expiry date, use by date, best before date, etc.? Can I simply say, whatever you have purchased, you are supposed to use it by this period? Is it okay? Whatever you have purchased, you are supposed to use it before this date. After the date is over, it becomes useless. Apply the same logic to National Anti-Profiteering Authority. Government of India set up National Anti-Profiteering Authority in 2017. And government said, this National Anti-Profiteering Authority will be working only for 2 years. Will be working only for 2 years. That is, the Anti-Profiteering Authority will have a lifespan of only 2 years. Can I call this as a sunset clause? Let me know. Sunset simply means the due date, right? Here is what is the time period which is effective for, etc. Right? That is the concept of sunset. Very often in the economics, when you talk about taxation, policies, etc., they will use the term sunset. Don't be confused. Sunset simply means what is the duration, what is the validity period of a certain clause, certain measure. That is basically the idea of a sunset clause. So when the authority was set up, we had a sunset clause of 2 years, which means it was only supposed to work for 2 years. Later, it was extended by 2 more years, 2021. Now later it was extended by 1 more year, 2022. Now again we are discussing. Again it is there in the current affairs, right? We want to wind it up. We want to close the functioning of National Anti-Profiting Authority. And some of you are asking why? Why is it for only 2 years? My dear, please understand, whenever these kinds of concepts are implemented or authorities are set up, you want the market to work efficiently. Now understand this. Your concern is that some of the companies will profiteer. Hence, you want to stop profiteering. You will have National Anti-Profiting Authority. Now tell me, right? Understand this point and let me know, if one company is profiteering, don't you think compared to another company, it will start losing market share? Think of it. Please let me know. Right? Imagine there are two companies. One company will profiteer. That is the same example I'll take. Right? There are two companies which are selling this bottle to you. One company will profiteer and sell it at 108. Another company will simply say, whatever profit I'm earning, I'm okay with that. They will start selling it at 105. You tell me, will you purchase the bottle from the first company at 108 or second company from 105? Automatically will start shifting from first company to second company. And that is where the company will realize, if I keep on profiteering, my market revenue will go down. Market share will go down. So what will happen? Because of the competition, we expect the market to work efficiently, right? The profiteering instances will not happen. That's a reason. That's a reason we had only for 2 years. Is it okay? That's a reason we had only for 2 years. After that, we expected the market to work efficiently. Done? Can we go to the next one here? These are the points related to the GST, right? Please be very careful. Now, what has been the performance of GST for the last 5 years? I've given certain data here. Please have a look at it. If you ask me, please do not buy at any data. Trust me, UPSC will not ask you data. Please do not buy at this data. Don't waste your time. Then what should I see, sir? Number of taxpayers under GST has increased. Point number one. Number of taxpayers have increased. Point number two. Amount of taxes which are collected under GST also have increased. But please make an observation here. Is there a volatility in the tax revenue collection? Volatility means instability. Tax revenue collection under GST has increased. No doubt regarding that. We are able to collect more and more taxes under GST. But is there volatility, instability in the taxes collection or not? Some of you are saying no. Then please observe the graph. Please, my dear, observe the graph. Don't you think in some of the years, tax revenue collection has increased very fast? In some of the years, tax revenue collection has gone down. In some of the years, tax revenue collection has increased by a moderate pace. Right? That is what I'm trying to convey here. Instability. I'm not saying it is wrong. I'm saying it is unstable. And when there is instability in the revenue collection, will you have more confidence or less confidence on GST? Again, you're the chief minister. Think of it. Again, you're the chief minister. When there is such kind of volatility in the tax revenue collection, they're not continuously increasing by 10%. They have not continuously increased by 20%. In 1 year, 10%. In another year, 30%. In another year, 6%. Don't you think you will be more circumspect? You'll be more having doubts regarding GST functioning in India. That is what I'm trying to convey here. Yes, there have been factors. Many of you are saying, but sir, pandemic. Yes, my dear, I'm only saying there is a pandemic. Then the problem will be much more intense for the chief ministers. What if the pandemic again will happen? Revenue collection of the state governments will further go down, which again will prove the same point that states will have lesser confidence on GST. Right? I hope you understand the logic behind it. Right? So these are certain observations of function of GST in the last 5 years. Just have a look at it, glance through it. Do not by heart numbers. UPSC doesn't ask numbers. Okay? Now, what are the concerns of GST? One, compliance. Now, many of you will start typing, what is compliance? What is compliance? Let me define it. I'll give you example. Then I'll tell you why GST it's burden. Compliance means what is the expenditure? What is the expenditure the companies will incur to follow the guidelines of government? To follow guidelines of the government. Can I give you one prime example in recent times? Follow guidelines of government. Now, let me give a very simple example. Tell me whether this has increased the expenditure for the companies or not. Because of the pandemic, all the companies which are having labor in India now have been asked to install sanitation machines. That is basically the machines where let's say the employees will go clean their hand and come back. Now, please tell me, installing such machines, has it increased the expenditure incurred by the companies or not? Simple idea, by the way. Right? Has it increased the expenditure incurred by the companies or not? Now, can I call this as a compliance burden? Let me know. Can I simply call this as a compliance burden or not? Right? Answer is yes, by the way. Now, how GST becomes a compliance burden? Under GST, Government of India says all the taxpayers, that is companies, shopkeepers, restaurants, etc., one, all of them will have to be registered. Point number one, all of them have to get GST registration number. Point number two, all of them will have to keep on generating bills now. Right? Anybody who sells, they will have to generate a receipt. Does it stop at that point? No. You'll have to generate receipt. Now, because you're registered under the GST network, you'll have to submit all the documents to the GST network. Now, tell me, because of these three steps, will the expenditure incurred by the companies, sellers, hotels, restaurants, etc., will it be increased or not? Think of it. Will it increase or not? And in many of the cases, what has happened is, these are very, very small manufacturers. Very, very small manufacturers. Right? Where 2 employees are there, 3 employees are there, 4 employees are there. Now they are forced to hire one more company which will provide such services to them. Right? External companies are there which will provide services but charge money to these companies. So that is basically one problem, compliance burden. Second one, multiplicity of tax rates. Multiplicity, where we have discussed this. Why multiple tax rates under GST is a problem, we have discussed. Please remember that. Third one, instability in terms of revenues. Instability. Right? In 1 year, we are collecting very huge amount of taxes. In the next year, because of pandemic, because of global slowdown, etc., GST revenues will go down. And in addition to this, it has been found that many of the companies are not paying right amount of GST. That is common, very common. Just like you and me, who must have seen many people not paying right income taxes. Right? Have you come across such people or not? Who will never pay right amount of income taxes that they owe to the government. So argument is simple. In the same way, there are also many sellers in the market, many companies in the market who do not pay right amount of GST to the government. Right? So revenue is, there is a certain concerns about the revenues. And finally, we also have certain exempted goods. We will have to bring all these exempted goods under GST. But will the state governments agree to bring these exempted goods under GST? For example, alcohol. Will the state governments give away the powers to impose a tax independently on the alcohol, give it to the center? We'll have to see. Right? In addition to this, you can also say exempted goods as well as other goods such as fuel products on which GST is not yet announced. We are yet to announce GST on the fuel products, etc. So these are some of the concerns associated with the concept of GST, that is goods and services tax in India. Done? Right? So congrats. This is in totality the discussion on GST. This is totally the discussion completely on GST. And trust me when I say this, we have discussed more than what is actually required for UPSC. Right? You can check. I'll show the questions. Don't worry. I'll show you the questions after some time. Right? We have discussed more than what is required. Done? So any doubts that you people have, let me know. What is point number 1? Because the companies will have to be registered, they will have to generate the receipts every time. Now it simply means they will have to hire a person for this. They will have to purchase a laptop, right, a printer machine, etc., etc. The cost incurred by the companies have increased. Okay. Revenue. The revenues which have been collected are not stable. In 1 year, revenues are very high. Another year, revenues are very less. As a result of this, there are certain concerns over revenues, right, which are supposed to be given to the states. Okay. Done? Okay. Shall I go to the next one? This is a discussion regarding GST. Please go through this. Please go through. GST is very, very important. Okay. Now, what are the other concepts related to taxation? We are at the fag end of the discussion on taxation here. What are the concepts related to taxation? Let me start. 1, 2, 3, and 4. Tax buoyancy, tax elasticity, tax expenditure, and tax to GDP ratio. Let me start with the fourth one here. Tax to GDP ratio. It is basically the ratio of total taxes collected. I will write it here. Tax to GDP. It is the ratio of the total tax amount collected divided by the GDP value of the country. Okay. Tax to GDP ratio is basically the total taxes which are collected by the government divided by GDP value of the country. That is called as tax to GDP ratio. Now, let me ask a very simple question. What would be your preference? Having a very high tax to GDP ratio or having a low tax to GDP ratio? I'll explain it, but let me check how your mind works. I'll explain this. Don't worry. What would you prefer? Having very high rate of a tax to GDP ratio or low tax to GDP ratio? Your answer should be, sir, tax to GDP ratio should be higher. Simple idea. Tax to GDP ratio should be higher. Right? Why? Please understand the logic here. If GDP represents the market price of all the goods and services which are produced, and this also starts increasing, what should happen to the taxes collected by the government? Point number 1, understand this. What should happen to the taxes collected by the government? Don't you think government should be able to collect more and more tax revenues? The government should be able to collect more and more tax revenues. If the tax revenues keep on increasing at a very, very faster pace compared to GDP, automatically tax to GDP ratio will start increasing. Point number 1. Point number 2, government, understand the logic here, right? I'll go back to the earlier discussion that I've had. Government can collect the money by selling the assets. Government can collect the money by borrowing also. Government will also collect the money in the form of taxes. But you tell me, if your expenditures are higher between these three, that is borrowing from the market, from others, selling assets in the market, or taxes, when your expenditures are very high, would you want to borrow more? Would you want to sell more of your assets? Or you would want to finance all of this by collecting more and more taxes? Don't you think if you can finance more of your expenditure through taxes, that represents your efficiency? Think of it. I'll repeat the statement again. If you can finance means more of your expenditure you're able to incur by collecting more and more taxes. Will it not represent efficiency of the government? Right? That is the argument. And please understand, if the tax to GDP ratio is lower, if the tax to GDP ratio is lower, it also means requirement on the borrowing will be higher. I'll repeat the third point here. If your tax to GDP ratio is lower, right, your requirements through borrowings will start increasing. Your dependency will start increasing. Right? That is the importance of having higher tax to GDP ratio. Now, what do you generally consider as a higher tax to GDP ratio? There is no formula for it. But if you compare other countries, for example, earlier I've used OECD. Do you remember this? Yesterday itself, I've used OECD, Organization of Economic Cooperation and Development. The OECD group of countries, they have a tax to GDP ratio of more than 30%. The OECD group of countries have a tax to GDP ratio of more than 30%. Some year it will be 32, some year it will be 35, some year it will be 37. If you compare that with India, tax to GDP ratio is less than 20%, which also means there's a scope in India to increase the tax to GDP ratio. Simply increase the tax to GDP ratio. Now, many of you will ask me, sir, why? Why is that tax to GDP ratio is very low in India? Is it okay if I say one of the primary reasons? One of the primary reasons is tax evasion. Tax evasion, and the other reason will be tax avoidance. I've discussed tax avoidance yesterday. Is it okay? I've discussed tax avoidance yesterday. And if there's a tax avoidance, very high tax avoidance, what will happen to tax collected by the government? Tax collected by the government automatically will come down. And when the taxes collected by the government will come down, tax to GDP ratio will also be lower. Now, what is this idea for tax evasion? What is this idea for tax evasion? Tax evasion refers to actions taken by the taxpayer to reduce tax liability. To reduce tax liability. Now, before you start typing, listen to the lecture very carefully. Tax avoidance is what? Tax avoidance is also actions taken by the taxpayer to reduce the tax liability. What is the tax evasion? It is also actions taken by the taxpayer to reduce the tax liability. Then how is one different compared to two? Two is not illegal. Two is not illegal. One is considered to be illegal. You are using illegal methods. You are not using legal methods. You are using illegal methods to reduce the tax liability. Let me give you a very prime example. All of you will agree to me when I say this. How many of you seen people who have lot of homes, give it on rent, but will not pay any income tax on the rent that they're collecting? Let me know. That simple example, and I'm pretty sure all of you have seen this example. In this example, the owner of the home will prefer to get the payment of rent in terms of cash. Why do you think they prefer the payment in terms of cash? Right? The reason is very simple. If you pay in cash, government will never come to know whether the person is earning additional income in the form of house rent. They will never come to know. Government will never come to know. Right? Imagine I'm a house owner. Again, imagine I have two flats. I will give both of those flats on rent to you. You will give me 50,000 rupees each. Monthly, I will collect 1 lakh rupees cash. I will not file income taxes to the government on 1 lakh rupees. Is it illegal or not? Is it a legal way? Not reporting your source of income, is it legal? Of course no. It is illegal. Right? So understand the logic here. The tax evasion is basically referring to certain actions taken by the taxpayer which are not legal, which are actually illegal, right? Basically reducing the tax liability. That is called as a tax evasion. Now, is the logic okay? Whether it is a tax avoidance or the tax evasion, the amount of taxes collected by the government automatically will go down. And as a result of this, the tax to GDP ratio will also start going down. Right? There are many other reasons. I'll give you one more reason. Please have a look at this. In case of India, whatever income is generated on the agriculture sector, there is no income tax on it. I'll repeat it again. Right? Whatever income is generated in the agriculture sector, there is no income tax on it. Now you tell me, if there is no income tax collected on the income generated in the agriculture sector, don't you think automatically the amount of taxes collected by the government will go down? Right? So I've written one example here, second reason here, and the third reason also I've written. Right? Any other reasons why tax collections in India are very high, or tax collections are comparatively lower? There's a fourth reason. There is a term called as tax expenditure. I'll come to that. There's a term called as tax expenditure. Have patience. These are the four primary reasons why the tax amount collected in case of India is lower. Okay, that is the first one, tax to GDP ratio. Tax to GDP ratio. Let me go to the second one, tax buoyancy. Let's finish off all the four, then we'll take the break. Right? So next, the first one is tax buoyancy. What do you mean by tax buoyancy? Tax buoyancy measures growth rate in the tax revenue as a comparison to the overall GDP growth rate. That is, again, many of the students get confused between 1 and 4. Understand the difference very carefully. Many of you get confused between first and fourth. Fourth one, what is your tax revenue divided by GDP value? First one, let me show it to you. What is first one? Imagine this year, the amount of taxes you have collected is 100 crore and value of GDP is, let's say, 2000 crore rupees. 2000 crore rupees. Next year, the taxes collected will increase from 100 crore to, let's say, 110 crore. Right? Will increase from 100 crore to 110 crore. And the GDP value will increase from 2000 crore to, let's say, 2400 crore rupees. It will increase from 2000 crore to 2400 crore. Now, what is the tax buoyancy? What is the tax buoyancy? Tax buoyancy represents percentage change in the taxes collected divided by percentage change in the GDP. Is it okay? Percentage change in the taxes collected divided by percentage changes in the GDP. Now I'll directly write it. It is 10% here. It is 20% here. Substitute 10% divided by 20%. Cancel. 1 divided by 2, it will be 0.5. Tax buoyancy is 0.5. But what is the meaning of it? What is the meaning of tax buoyancy of 0.5? The meaning is very simple. If your GDP will change by 1%, the taxes collected will change by 0.5%. Is it okay? Right, I'll repeat it again. Right, if your GDP changes by 1%, your taxes collected will change by 0.5%. Right, that is the idea of a tax buoyancy. That is meaning of the term tax buoyancy. Now, simple question to all of you. What would you prefer? A lower tax buoyancy or a higher tax buoyancy? Think of it and let me know. Which one would you prefer? A lower tax buoyancy or a higher tax buoyancy? My dear, you should always prefer a higher tax buoyancy. You should not prefer lower. You should prefer a higher tax buoyancy. Why? Right? Some of you don't think it correctly through. You should prefer a higher tax buoyancy. Argument is, when your GDP changes, when your GDP grows, the amount of taxes collected should increase by a faster pace. Does it make sense or not? Let me know. When your GDP changes at a certain percentage, the taxes collected should be much, much higher than whatever is the rate of change in the GDP. You should take more and more amount of businesses, cover more and more businesses, taxpayers, etc. under taxation, so that you will collect more taxes. Right? So I hope you understand this. You should prefer a higher tax buoyancy. And when I give a break after some time, please check. The government of India very recently has given the tax buoyancy numbers. They'll say tax buoyancy is 1.2. They'll simply use these kind of numbers. Tax buoyancy is 1.2. Tax buoyancy is 1.4. Tax buoyancy is 1.5. What does it indicate? It simply indicates that if your GDP increases by 1%, the taxes that you have collected have increased by 1.5%. That is always preferable. Having a higher tax buoyancy is always preferable. Right? Now, another very important point. Tell me whether this is correct or not. Higher the tax buoyancy, tax to GDP ratio tends to increase. I'll repeat the statement. Higher the tax buoyancy, the tax to GDP ratio tends to increase. Does it make sense or not? I'm using a simple CSAT concept. Right? If the taxes grow very fast between this year to next year compared to GDP, the tax to GDP ratio automatically will start increasing. That is the point here. That is the point. Please be very, very careful. So tax buoyancy, tax to GDP ratio. Finally, two more points. After this, we'll stop. That is take a break. Tax elasticity, tax expenditure. Tax elasticity, tax expenditure. Let's start. What is this idea of a tax elasticity and tax expenditure? I'll write an example here. Follow this very carefully. Imagine right now you are able to collect 100 rupee tax. Understand this very carefully. Imagine right now you are able to collect 100 rupee tax. We will increase the amount of taxes collected in two different ways. We'll increase the amount of taxes collected in two different ways. One way, increase the tax rate. One way to increase the amount of taxes collected is increase the tax rate. And second way to increase the taxes collected is we'll increase the value of GDP. We'll simply increase the value of GDP. Let me prove it to you. Imagine this bottle is being sold and the price of the bottle is 1,000 rupees. Price of the bottle is 1,000 rupees. Let's say right now the tax is 10%. Now please tell me, 10% on 1,000 rupee, how much tax you will collect? 100 rupee. Can I increase the amount of taxes collected on the bottle? Of course, yes. From 10%, I will increase the tax rate to 20%. I'll increase the tax rate to 20%. What will happen to the taxes collected? 200 rupees. Is the logic okay? Taxes collected will increase to 200 rupees. Second example, rather than selling one product, one bottle in the market, now I will sell two bottles. I'm not going to change the tax rate. I'll simply sell two bottles at a tax rate of 10%. What will happen to taxes collected here? The taxes collected here will increase to 200 rupees. Now, is the logic okay? What I'm trying to convey is very simple here. Very simple. One, the way to increase the taxes that you're collecting, one method is increase the tax rate, the amount of taxes collected will increase. And the second one, automatically GDP will increase. From 1 year to next year, GDP will increase and the taxes collected will also increase. Right? That is basically the two concepts. I'll start using the statement here. Please have a look at it. Tax elasticity. Tax elasticity measures growth rate in tax revenues as a revenue collection as a response to change in the tax rate. I'll repeat it. What is the tax elasticity? Measures growth rate in the tax revenue collection as a response to change in the tax rate. Now you please tell me, if I write this as number 1 and number 2, which represents tax elasticity? Please look at the examples and tell me now. I've given you 2 examples. Under both of them, the taxes have increased. Which of the 2 actually represents a tax elasticity? First one represents a tax elasticity. Arre. Some of you are saying example 2. My dear, what are you looking at? Let me know. What are you looking at? Please read the statement. Please read the statement. Statement 2, please read it. Measures growth rate in the tax revenue collection as a response to change in the tax rate. And those who are saying example 2, now you people tell me. You tell me, in the example 2, tax rate is getting changed. Rather than asking me, suddenly certain students are there. I know, they generally keep on asking the same question. How? I said, 1 is correct, 2 is wrong. Suddenly their point is, how? Why? Tell me. It simply indicates that you are not listening. That's it. I will come to know. Right? It simply indicates that you are not listening. In the first case, I told you tax rate is changed from 10% to 20%. That is tax elasticity. In the second case, GDP is changing, and as a result of it, tax is changing. Is it tax elasticity? No, we are keeping the tax rate same. Listen carefully. Right? Please listen to the lecture very carefully. Tax elasticity. And finally, tax expenditure. Finally, tax expenditure. What is the idea for tax expenditure? It is the tax revenue that is foregone by the government as a result of certain exemptions, rebates, etc. provided by the government itself. Now, before you start asking, sir, give me example, that, this, etc. How many of you remember I told you 2 points about special economic zones yesterday? Let me finish this, then we'll take the break. How many of you remember the 2 very important points I told about special economic zones yesterday? One of the very important point, if you remember it carefully, I told you, for 5 years, whatever is the profit earned by the company in the SEZ, there will be 0% taxes collected by the government. There will be no tax for 5 years. Now, please tell me, if a company is earning a profit of 100 crore within SEZ, government, rather than collecting 30% tax, will not collect any tax. Is it not a tax revenue foregone? Let me know. Right? If you're a company outside SEZ, government will simply impose 30% tax and collect it from you. But because you are there in the SEZ, government says this year, don't pay any tax to me. You enjoy all the profit. Don't give me anything. Which means, rather than collecting 30 crore, government is foregoing. Foregoing simply means sacrificing the 30 crore rupee tax revenue. That is basically the tax revenue foregone, and that is called as tax expenditure. And you can see this idea for tax expenditure in corporate taxes, right? You can see in case of special economic zones. There is one more policy of the government. Later we will discuss this. Startup India policy. Right? Very, very important. Startup India policy. Under Startup India policy also, tax exemption is given by the government. For individuals also, earning income of up to 5 lakh rupees, tax rebates are given by the government. Right? So tax expenditure is the tax revenue that is not collected by the government because of all of this. Now think of it. Last question. After this, we'll take the break. Can I say one of the reasons that the tax to GDP ratio is lesser in India is a tax expenditure? Think of it. Can I simply say that one of the reasons, I've given you 3 reasons earlier: tax avoidance, tax evasion, and the third one, right? If you remember it correctly, the third one was basically exemption given to agriculture. Can I add the fourth one now? That is tax expenditure. Right? So these are some of the reasons why the tax to GDP ratio in case of India is lesser or on the lower side. Done? Right? So these are the four important concepts I wanted to discuss with you people regarding taxation. Now let's take a break. After the break, right, we are basically at the last part of discussions now. Last part of the discussions regarding taxation. So if you have any doubts, let me know right now so that we can discuss, address your doubts, then take a break. How the other countries will manage their taxes without overlapping tax, right? What do you mean by overlapping tax? Let me know. And I told you more than 150 countries have already implemented GST, so they already have addressed the issue of cascading effect. We just discussed that having one rate for all makes okay. I've addressed this. Why do we have only right? Why should we have one rate, or why there is a need for having different rates? And I've given you the way forward as well to write the answer to that. What about those countries who have one or two slabs of GST? Does it not lead to inflation in those countries? My dear, please understand this. I said there are more than 150 countries who have implemented GST. And in most of the countries, when they started implementation of GST, they have experienced a certain inflation. I hope you understand my point. They have experienced a certain inflation, right? Most of the countries have experienced inflation when they implemented GST. Okay. When 1,000 rupee already taxed, I've addressed the same question, right? How GST value addition will happen, etc. I've addressed it. What is the benefit of credit back if CP remains the same? My dear, you are right. Understand this. If you are a or let's say you are the government, would you want to find out how many companies are manufactured in India or not? Simple question to all of you. Many of you will ask me a question, sir, why does government collect a tax and give it in the form of input tax credit? It doesn't make any logic, you will say. Tell me, how will you find out whether they are involved in the profiteering activity or not? Point number one. Point number two, do you want to find out how many companies are manufacturing, at what price they are selling, so that you want to calculate what is their profit? Are they paying the right amount of corporate taxes or not? Yes or no? For all of this, how will you find out if you do not have any paper, any document which proves what is the value of the goods they have produced? Right? What is the tax they are claiming in the form of ITC, etc., etc., etc. Let me prove my point very clearly to you. Let me prove this very point very, very clear to you. Imagine only one good is produced in India. Think of it. Imagine only one good is produced in India and the GST rate is 10%. GST rate is 10%. And please have a look at it. If the GST rate is 10% and you have collected 100 rupee GST, I'll ask a question. Follow this very carefully. Only one good is produced in India and the tax rate was 10%. And the GST that you have collected is 100 rupee. Total GST, center, state, etc. Now, answer to my question, what will be the value of the good? What will be the value of the good manufactured by the company? 1,000 rupee. Will you be able to find out what is the value of the goods produced by the companies? Yes. Can they report a wrong data to you? Think of it. Can they report lower profits to you? No, they cannot simply do all of that because now they will have to show how they have arrived at 1,000 rupees, etc. So that's a reason. Many of you will try to find out loopholes everywhere. Don't do that. Don't do that. If the government has implemented such a system, there could be a reason to that. But that you don't have to be worried. You are not going to become, right, let's say, a chartered accountant for all of these reasons. Okay. If the consumed state collects GST, producer states, I've addressed this. Why no state tax in selling from A to B when B purchases raw material in pre-GST case? My dear, I've told you, the state, when the goods will move from A to B, when the goods will move from A to B, CST, Central Sales Tax, is imposed. Before GST, CST was applicable. You are not looking at the picture very correctly. Please have a look at it. Why are the private companies doing charity? Right? In what context are you asking? Please do let me know. In what context are you asking this question? But higher tax amount as a part of GDP will not truly represent the production activity in the country. Would it be a representative growth indicator? Not necessarily. Higher tax rate, you will be able to collect higher tax revenues. But again, there is a catch there also. There's a catch there. What is the catch? Right? Think of this very carefully. Right? I'll take a break after this. If the market price of the product goes up, if the market price of the product goes up because of higher GST, no doubt in short run, GDP will increase. I'll repeat, right? If the market price of the product increases because of higher GST, no doubt GDP in short run, GDP will increase. But you tell me, can you sustain this GDP number? Think of it. Will you be able to sustain this higher GDP? You will not be able to. Why? Higher market prices, what will happen to demand? Think of that also. What will happen to the demand? Demand will start coming down. And when the demand will start coming down, what will happen to the GDP value? It will also be affected. Done? Okay. So let's take a break now. I'll restart at 7:35. I'll restart the session at 7:35. Okay, take a break now. Okay. Welcome back. Good evening, everyone. Am I audible to everyone? Can we start? Can we start now? Am I audible or not? Please do let me know. Nobody wants to answer. Am I audible? Arre. Okay, done. Let's start. So what are the issues related to taxation system in India? We are discussing overall taxation system now. One, loss of revenue is very high. We have discussed the idea of a tax evasion as well as tax avoidance earlier. Second one, most of the economy is not covered under taxation. Right? What do you mean by most of the economy? Let me give a very basic idea. All of you have been outside, and when you are outside, you'll purchase something from the roadside. You'll purchase, let's say, a certain toy from the roadside, or you will purchase, right, let's say a cup of tea, right, or you'll purchase a samosa, etc. You please tell me, will all the people from whom you have purchased, will they provide a receipt to you? Will they give a bill to you? Answer is no. Right? Are they registered with the government? Again, the answer is no, which means certain part of the economy, right, is not covered whenever you are talking about, let's say, taxation, right? When you are talking about other, right, let's say taxes that are imposed as well as collected by the government. So the whole of the economy is not covered. Large part of it, informal. There's a term called as informal. Informal economy is not getting covered under taxation. Government will provide a lot of tax exemptions to corporates. We have discussed some time ago idea for special economic zones. Tax exemptions are provided, right? Before that, I also told you one more point, that is a startup India. That is another type of a tax exemption. So a lot of these corporates enjoy tax exemptions provided by the government. And finally, there are also certain issues. There are also certain issues that are plaguing the GST structure in India. So these are some of the issues that is affecting the overall taxation structure, right, in the Indian economy. Now, what are the reforms that have been implemented? Right, please understand what are the reforms that have been implemented. I have already discussed one very important reform, GST. Yes or no? Please let me know whether we have discussed all of them or not. Second very important reform is concept of GAR, General Anti-Avoidance Rules. Third one is concept of minimum alternate tax. Right, all these are what? Basically the different types of reforms, right? Most of these right reforms, right, we have covered. Some of these reforms, other reforms, let's cover that. One very important reform that has been doing rounds, doing the discussion in the recent times and the current affairs is Government of India announced in 2020 during the pandemic. Government of India, right, announced a set of reforms by the name of transparent taxation. Transparent taxation, honoring the honest. Now, what is this idea for transparent taxation, honoring the honest? Point number one, it was announced back in the year 2020 by the government. Under this transparent taxation, Government of India has introduced three very important pillars. Three very important pillars. One, faceless assessment. Second one is faceless appeal. Third one is a taxpayer charter. And with all of these reforms, what are we trying to achieve? We want to make the taxation system more taxpayer friendly. We want to increase the transparency in the system. We want to promote efficiency in the taxation system. Now, how all of these will be achieved with these three sets of pillars or three sets of reforms, let me explain this. Point number one, faceless assessment system. Now, please understand the logic here. There's a term called as assessment. Do you need to do a PhD on the term assessment? Absolutely no. Let me explain to you what the logic is. Imagine you have earned an income of 10 lakh rupees. Imagine you've earned an income of 10 lakh rupees. Now you will pay, let's say, I'll take a hypothetical number. you will pay, let's say, 1 lakh rupees income tax to government. A simple question to you. How do you think government will come to know whether this 1 lakh rupee income tax you have paid, whether this is correct or wrong? Think of it, right? Imagine you are the prime minister, right? 740, you are the prime minister. Now tell me, I will simply give you 1 lakh rupee income tax. How will you come to know whether that 1 lakh rupee, it is the correct income tax, or I'm supposed to pay more than 1 lakh rupees? There has to be a system in place. That is called as assessment. That is simply called as assessment, right? What I will do is, I will give you all the proof, right? I'll give you all the documents which will prove how much income I've earned. And I'll also give you all the documents where I've invested, how much I've invested. And with all these documents, I will basically give you a calculation. In one document, I'll show you the calculation why I'm supposed to pay only 1 lakh rupee income tax. Now, second question to you. I've given you all of these documents. Will you simply accept them? Think of it. Will you simply accept all these documents as correct? Right? Or you will start assessment of the documents. Assessment in simple terms is nothing but checking. Right? Or you will simply verify whether all of these details that I've provided are correct or not. And that is done by whom? Tax officials. That is done by the tax officials. Now, this is where the importance comes. Now, let's imagine a situation. You are the tax official. You have passed UPSC. You have become the commissioner now. These are my tax documents. I will come to you and I'll simply tell you, I hope remember, I troubled you so much with the economics classes. It is me, right? The one who has taught you economics, etc., etc. And I'll basically say, these are my tax documents. Some of them are not correct. Some details I've not entered. If you want, I'll give you certain amount of money. Please clear all these documents. Now, some of you will say, yes, sir, we'll do that. Some of you will simply say, no, sir, not at all possible. I'm here to serve the people, not you, etc., etc. And you will impose fines on me. Now, what if the first thing will happen? What if the first outcome will happen? That is, you will take some amount of money and you will clear all the documents. Simple terms, what if there's a corruption in the system? All I'm trying to tell you is this, right? What if there's a quid pro quo? What if there is a corruption in the system? Can Government of India keep on checking everybody like this? That's not possible. Now, what has been done by the government? They've introduced the concept of faceless assessment. They've simply introduced the concept of faceless assessment. Now, what is this idea of a faceless assessment? Imagine I will submit all of these documents. This is one document. I will submit all of these documents to you online. Now, it has been made online, if you know that. I will submit all these documents online to you. Now, what the government has done is they have introduced a new system wherein all these documents will go to a centralized system. That is, there is a centralized location, National Faceless Assessment Center. And what this center will do is, imagine this is a document. At the top of the document, my information is given. My PAN number is there, right? My address is there. What is my name? It is there. So what this center will do is, they will basically hide the details. All of you will agree with me? They will simply hide the details and they will give this document to you now. They will ask you, please check all the documents and tell me whether the taxes paid by the person, these are correct or not. Now, is it okay? Once they hide the details, or I'll use a term, once they mask the details of the taxpayer, we'll be able to find out that these tax documents are mine. I hope you understand. Will you be able to find out whether these tax documents are mine? Absolutely no. Right? And now you don't have any option but to check all the documents, right, very, very carefully. We will be addressing corruption in the system, right? We'll be able to ensure, right, nobody knows whose documents they are, right? We'll be able to ensure right amount of taxes are collected by the government, because understand the logic here. I've given certain faulty documents, right? Certain documents I've given, they are not correct documents. I should be paying 1 lakh rupees, but I'm sorry, I should be paying 2 lakh rupees, but I'm paying only 1 lakh rupees. Now you will be able to catch it, send a notice to me, collect more taxes from me. Is it not increasing efficiency in the system? Is it not making the whole system much more accountable? Is it not able to increase, right, the tax amounts collected by the government? That is basically the idea of a faceless assessment. Any difficulty? Can I go to the next one? That is basically concept of faceless assessment. Second one, faceless appeal. The idea of faceless appeal. Now, before I explain to you the idea of faceless appeal, let me ask you a very simple question. How many of you are under the assumption that government officials are very, right, approachable to the common man? Think of it. How many of you are under the right illusion that the government officials, let's say an IAS officer, for example, you, right, who will become an IAS officer later or IPS officer later, you are very approachable to the common man. The common man, right, Aam Aadmi can come to you, can get any kind of solution from you at any point of time. Is it so? Let me know. If anybody is under that illusion, please do let me know. That is where I hope you are reading the newspapers. I'll tell you a very important point. How many of you read today's newspapers? Please let me know. How many of you read today's Hindu newspaper? Right? Some of you are saying yes, some of you are saying no. Those who are saying no, think of it. You don't answer to me. Please think of it. How do you think you'll be able to prepare for current affairs? And those who are saying yes, have you read one article in the business page, which is there in the top, Moody's report regarding Indian economy? Let me know. Right? How many of you read that in business news? Hindu I'm talking about. Moody's, right? There is a very important, right, company, right? Moody's report about Indian industries. Now, what is one of the points they have raised? This is where you are supposed to apply current affairs, my dear. What is one of the points they have raised? They are saying that because of government policies as well as bureaucracy, that is the most important point. Carry it simply. Take that point and move forward. Bureaucracy. Because of bureaucracy, the industrialization in case of India will be affected. Yes or no? Because of the bureaucracy in India, we have a huge potential. India is one of the fastest growing economies this year. We will get a lot of investments. Industries will also be promoted in India. But because of bureaucracy, right, industrialization will be affected. If you have not yet read that article, my suggestion to you is read it. Please read it. Very good article. You don't have to do a PhD on it. Point is very simple. There is a problem of bureaucracy in India. Right? Many of you ask me, sir, what is the meaning of bureaucracy? I will tell you a very simple example. Tomorrow you'll become a minister. You will become a secretary in the Ministry of Commerce. I want to get a license from you. You will ask me to come 100 times to your office. You will simply withhold giving license to me. You will simply find out a trivial issue, right, and ensure that the licenses that are issued will be delayed. Now tell me, will it have an impact on the investment or not? Let me know. Will it have an impact on the investment industrialization in Indian economy or not? Answer is simply yes. That is what Moody's is saying. Right? So even in the future, when I simply say bureaucracy can become a problem for investments in India, don't keep on asking, sir, why, how, tell me. The answer is there right in front of you. Right? Because you're not reading correctly or the correct articles, you'll miss out on all of these points. Okay? Come back to this. What is this idea of a faceless appeal? Right, can you go forward? What is this idea of a faceless appeal here? In the faceless appeal, again, I don't know if there is a technical issue or not. Am I audible to you? Am I audible to you? I'm not getting any reply from your side, and that is a cause of concern for me. Am I audible to you? Okay, thanks a lot. Let's start. Let's continue. Right? Okay, next one is faceless appeal. Now, what do you mean by faceless appeal? Let me continue with the same example. I have submitted all my documents. Okay, I've submitted all of these documents to you. You will check all the documents again through centralized system. I hope you understand. Through centralized system. And now, right, you have basically found, you as a tax official, you have basically found that the documents that I've given are not correct. Right? You will have to demand more amount of taxes from me. So what you will do is, you will send a notice to me. It is called as a tax notice. Those who are paying income taxes generally will be afraid of tax notices. So I've paid an income tax of 1 lakh, but you have calculated and you have understood that I'm supposed to pay 2 lakh rupees. So what you will do now, you will send a tax notice to my email ID. Right? I will receive a tax notice or a tax demand notice. Now I don't have to literally go to income tax office. I hope you understand why here. I don't have to go to income tax office because one, income tax officials, they may or may not address my concerns. They will basically, let's say, harass me, ask me to come 10 times after 1 hour, after 2 hours, etc. like this. Government says, we'll introduce a new system where online itself, you can appeal against the order. Is it okay? Online itself, you can appeal against the order. That is, through the online system itself, you can simply say, no, my calculation is correct. These are the documents. Please accept these documents. I will pay 1 lakh rupees. This is called as faceless appeal. Now, what is the advantage of this? Again, because you are not getting in touch with the income tax official, there is no face-to-face contact with the income tax official. Is there a scope of corruption in the system? Is there a scope of quid pro quo in the system? Will it not increase efficiency? Will it not reduce harassment of the taxpayers, etc., etc.? So that is the concept of faceless appeal. So faceless assessment, faceless appeal. Next one, taxpayer charter. Next one is the idea of a taxpayer charter. What do you mean by taxpayer charter? The taxpayer charter is basically a document. Those who have finished polity lectures, for them, it's much easier to understand. Have you come across a directive principles of state policy? Directive principles of state policies, right? And you also come across fundamental rights, fundamental duties. Now tell me, fundamental duties. Again, those who have not read, those who have not finished polity, please don't worry. Fundamental duties are basically certain, right, list of all these duties that we are supposed to do, right? In the same way, I hope you understand, in the same way, taxpayer charter is a document. It is basically a document. What is there in this document? In this document, Government of India has listed out what the taxpayers are supposed to do and what the tax department is supposed to do. For example, what do you expect as a taxpayer? When you go to the tax official should be courteous to you. The tax official should not treat you as a criminal. They should treat you courteously. They should be open to your questions, etc. That is what exactly Government of India says here. Please have a look at it. The tax departments should be fair, should be courteous, should be providing reasonable treatment to taxpayer. The tax department should treat every taxpayer as honest, etc., etc. Again, just a set of document. It is nothing but a document. What the tax department is supposed to do, and in return, what the taxpayer is supposed to do. As a taxpayer, you should be very honest. This is what government tells you. As a taxpayer, you should be very, very honest. And whenever, right, you will file all of these documents, you should disclose all of these information, right? Whatever documents you're supposed to collect, keep a record of all of these documents and submit all of these documents to government, etc., etc., etc. Done. This is basically the idea of taxpayer charter. In a nutshell, if I want to put it in a nutshell, it is what is expected from the taxpayer plus what is supposed to be done by the tax department, right? That is the taxpayer document, right? So these are the three very important reforms that the government of India has announced under the concept of transparent taxation, honoring the honest. Okay, right? So the last concept under taxation, right? Many of the times this has been asked in UPSC prelims, preliminary examination, the idea of Laffer curve, concept of Laffer curve. And if you want to take my advice, please make a list of all the graphs that we are discussing here and there. Is it okay? Take my advice, because one graph is generally asked in UPSC prelims. Make a list of all the graphs that we are discussing. So far, how many graphs we have discussed? We have discussed a graph of law of demand, law of supply, and the Phillips curve. And now I'm adding one more, the Laffer curve. Now, what is the meaning of the term Laffer curve? Let me explain. Point number one, this is called as a Laffer curve because this concept was given by one economist, Mr. Arthur Laffer. Mr. Arthur Laffer. Okay, that is point number one. Point number two, what does the Laffer curve actually tell you? As per this Laffer curve, or as per this economist, please have a look at the graph here. Along the y-axis, we will represent government expenditure. Along x-axis, will represent tax rate. Along y-axis will represent government revenue collection, and along, right, the x-axis will represent a tax rate. Now, please observe the x-axis. Let me know whether the statement is correct or not. Along the x-axis, the absolute number of tax rates are not given. I'll repeat it again. Make an observation right now. Along the x-axis, what is the tax rate? Is it 10%, 12%, 23%, 46%, 32%? The numbers are not given. Is it okay with all of you? Numbers are not given. What is given is 0, 1. That's it. And what is the meaning? I'll tell you. Now, what does it represent? It says that as the tax rates are increased, the amount of revenue collected by the government will keep on increasing. I'll repeat the point again here. As the tax rates are increased, amount of revenue collected by the government will also keep on increasing. But not always. Whenever the tax rate crosses a certain threshold number, I repeat, whenever the tax rate will cross a certain threshold number, after this, if you increase the tax rate, the tax revenue, rather than increasing, will start decreasing. Any problem with this? I'll repeat the statement, then I'll explain why. Have patience. Don't worry about why. Listen to the statement first. Listen to the statement. As the tax rate increases, the revenue collected will increase. Please look at the graph from here to here. I will use a different color so that you understand. Can you see the pink color now? Can you see the pink color in the graph? Tell me, what does it represent? As the tax rate will keep on increasing, the taxes collected by the government is increasing. Yes or no? Yes or no? Please look at only pink color. Now, after T star is over, right? After you cross a T star is what? Actually tax rate. After you cross a T star, any further increase in the tax rate, you will not be able to collect more revenue. Rather, the tax revenue will fall down. Does the blue line represent it or not? Does the blue line talk about the same thing? This is what the Laffer curve says. Now let me explain why. Let me explain why. Point number one. Imagine the tax rate is 3%. Imagine the tax rate is 3%. If the government will increase the tax rate from 3%, let's say, to 6%. Before I explain, I'll tell you one very important point. You can read 100 books on the Laffer curve. I repeat, you can read 100 books. Don't do that. None of the books will give you numbers. Why? I'll tell you the point here. If the tax rate will increase from 3% to 6%, simple question to all of you, what should happen to taxes collected by the government? What should happen to taxes collected by the government? The government tax revenue collection should increase. That is exactly what is given in the pink line. That is exactly what is given in the pink line. But second part of this theory, what they say is, imagine, I repeat, imagine the tax rate is, let's say, 30%. So at 30%, the amount of tax you will collect will be the highest. Now you are the government, you want to collect more tax. So what you will do? You will increase the taxes from 30% to, let's say, 35%. You want to collect more tax. So what you will do? You will increase the tax rate from 30% to 35%. What this theory says is, when you increase it from 30 to 35%, your tax revenue collection will not increase, rather decreases. And that happens because the economist says, when the tax rates are increased, people will start replacing work with leisure. People will start replacing work with leisure. What is the argument of replacing work with leisure? That is, you as a worker, until now you are paying certain amount of tax. I will increase it. Now you will simply come to a conclusion. If I work more, government will collect more taxes from me. So what you will do? Rather than working more, you will start taking more leaves. You will not go more to the work. You will reduce the number of days you are working. Leisure means, right, basically leaves. You will start applying for leaves. You will start sitting at home. Your argument is, government is going to collect more taxes from me. So why should I work more? So you will start replacing work with leisure. Work will come down. Work will come down. And when the work will come down, you tell me what will happen to your income. Your income will go down. And when your income goes down, what will happen to taxes collected by the government? What will happen to the taxes collected by the government? Right, basically, taxes collected will also go down. And in the extreme case, look at this. Look at the extreme case, 100%. Extreme case is 100%. Simple question to you. 100% tax rate, meaning what? Whatever you earn, government will take it away. Will you work? Think of it. 100% means whatever you earn, 100% will be collected by the government in the form of taxation. Will you work? No. And when you will not work, what is your income? Zero. If your income is zero, how much taxes will be collected by the government? Even though the tax rate is 100%, the amount collected by the government will be zero. This is basically what the Laffer curve says. Done? Now, is it applicable in real life? Is it applicable? No. There are a lot of concerns, lot of problems, lot of assumptions that have been made in the Laffer curve. How? Understand this very carefully. You tell me any example where you have seen where people will start replacing work with leisure when the tax rates are increased. I hope you understand. If the income tax tomorrow, let's say if the income tax is increased from 10% to 15%, will you start earning, or will you work more and earn more, or you will reduce your work? I hope you understand the logic behind this. right? So the practicality is not there here. One is practicality. Second one is, please have a look at the graph. I said a T star. There is a term here, T star. And I said, please look at along the x-axis, no numbers are given. Now you tell me, what will be this T star? This is called as optimal tax rate. T star is referred to as optimal tax rate. What do you mean by optimal tax rate? Please look at the graph and let me know whether the tax revenue collected at optimal tax rate is highest or not. Please have a look at it. Right? Is the tax revenue collected at the optimal tax rate, is it highest or not? Yes. But tell me, how do you derive, how do you understand what is optimal tax rate? Absolutely no formula. There is absolutely no formula. You can check, right? After the class is over, you type in Google also. Check it. None of the books, none of the articles, none of the economists will tell you what is this T star. They simply say at optimal tax rate. At this particular tax rate, tax revenue collection will be very high. And third one, think of it and let me know. Don't you think the amount of revenue collected by the government from taxes will be affected by many other factors also? Think of it. Please think of it. I'll repeat the statement again. Amount of taxes collected by the government, is it not affected by many other factors apart from the tax rate or not? Right? For example, if you apply the logic here, if you apply the logic of Laffer curve in 2020, imagine, right? Think of this. In 2020, government will increase the tax rate, income tax rate, corporate tax rate from 30% to 40%. Now tell me, will the government be able to collect more tax revenues, right, in 2020 by increasing the tax rate? Was that a possibility? Think of it. Answer is no. Right? Answer will be simply no. Why? 2020 was pandemic. Whole economy had shrunk. There was a contraction in the economy. Companies are earning lesser profits. Many of them are incurring losses. You apply the Laffer curve, increase the tax rate, then it says your tax revenue will increase. Does it work out? Absolutely no. Right? So that's the reason I said in real life, in practicality, there are a lot of concerns regarding the Laffer curve. And many of you will ask me after this, then why should I learn it? The answer to that is, my dear, UPSC has asked a question on this twice in the last 10 years. That is the reason you should learn about it. Right? So that is basically the idea of a Laffer curve. Right? So this is the end of the discussion regarding taxation. Any issues, let me know right now so that we can discuss questions from inflation, then take up questions from taxation. Couple of more questions are there in inflation. Let's finish it off. Then let's come back to questions on taxation. Can we go forward? Optimal tax rate, I'll repeat it. Listen to my statement. That's the reason. Optimal tax rate represents a tax rate where your tax revenue collection is the highest. And again, I'll repeat it. There is no formula to find out what is your optimal tax rate. Right? That is what the theory says. There is no formula. Theory says if you reach optimal tax rate, your tax revenues are highest. And if you increase it, if you increase after this, tax revenue will fall. That is basically the idea of optimal tax rate. Okay? So last one of GST. Please tell me what is last one. Rather than saying last one of this, that, etc., please tell me the point so that I can repeat it. Okay? What about 51%? Now you tell me on what basis did you decide 51%? I hope you understand. You tell me, right, on what basis did you decide 51% is optimal tax rate? How? You tell me. Right? There is no answer to that. That's the reason. Despite telling this, right, I believe around 10 times now, again I'll repeat it. There is no way that you can find out what is the optimal tax rate using Laffer curve. Okay? Done. So let's take up the questions that we are yet to discuss from the inflation. Start solving. Okay, at 55% have answered correctly. What about others? With reference to economy, core inflation is considered to be a better indicator than headline inflation. Right? How? Core inflation excludes certain items that are subject to sudden and short-lived price movements. Is it not correct? Many of you have not taken A correctly, but A is the correct option. Right? The question is very simple. With reference to economic, core inflation is considered to be a better indicator compared to headline. How? Core inflation will not include those commodities whose prices are unstable. Did we discuss this or not? I gave you example of food, fuel. That is what the A says. So based on this, can you not decide core inflation is a better indicator compared to headline inflation? Answer is A. But let me eliminate remaining three as well. Core inflation has a wider basket of items. Wider means what? More. Right? Between headline and core, think of it and let me know. All of this is over, by the way. Between headline and core, under which of the two you think there are more number of commodities in the basket? Right? Headline, that should be very straightforward. Because we take headline, remove some of them, we move to core. So obviously, it is the headline inflation which has a wider basket of items, not core. Third one, headline inflation is used as a nominal anchor. Now there's a technical term called as a nominal anchor. Anchor, right? Have you heard of the term anchor? In the ships, anchor is there. And what is the use of the anchor? What is the utility of the anchor? It will hold. It will provide support to the ship. Right? Basically, what is the meaning of the statement? Whenever we want to decide the monetary policy, tomorrow we'll discuss this, by the way. Whenever we want to decide the monetary policy, what is the inflation rate used in India? Right? What kind of inflation rate is used for making monetary policy? Do you remember? Headline inflation. Yes or no? In case of India, 4% is the inflation target. 4% which inflation? Headline CPI. But please look at the statement C and tell me, is it an answer to the question? Be very careful. Be very careful, because some of you will say statement C is correct. I'm not saying statement C is wrong, but tell me, is the statement C answer to the question? No. Any problem here? Any problem? And core inflation includes certain items that are subject to sudden and short-lived movement. It excludes, doesn't include. Option D is also wrong. So the right option for the question is option A. Next. Okay, 80% have answered correctly. Some of you have made a mistake. I'll tell you why. You will read A and you will directly tick off A is correct. I'm pretty sure many of you made the same mistake. You will read A and jump to a conclusion. Yes, I got one answer correctly. You will go to your OMR sheet and nicely do this point. A like this. And you will come out of this hall. Then you will have a discussion and you will realize, Arey Baba, it is not A. It is actually D. Please don't make this mistake. I'm pretty sure at least some of you have made this mistake in answering it. Let's start. Which one of the following factors can cause cost push inflation in the economy? Oil price increases in the world. We have discussed this, by the way. Yes, oil price increases can cause cost push inflation in India. Fluctuation in the production of food grains, right? Fluctuation in the production of, let's say, rice, wheat, sugar. Will it not cause cost push inflation in India? Yes. Imposition of high commodity taxes, GST. Tell me, if the government will impose a higher GST, will it not cause supply side inflation or a cost push inflation or not? Again, the answer is yes. So A will cause, B will cause, as well as C will cause cost push inflation. The right option will be option D, all of the above. Right? All of the above is the right option. Okay? A descriptive question here. Do you agree with the view that steady GDP growth and low inflation have left the Indian economy in good shape? Give reasons in support of your arguments. Now, this is where I'll tell you the model answer. This is where I want to make one point very clear. Many of you are under the impression that if you read book by the way, you'll be able to solve questions in the mains. I will assure you that is the wrong approach. I'll repeat it again. Many of you are under the impression that you read one book, you'll be able to answer questions in the UPSC mains. Right? I'll give it in writing. That would be a blunder, very, very wrong approach towards GS paper 3 Indian economy. Why? Take this question, search any book. I'll guarantee this. Take this question, search any book. They would have not given any discussion on this. That is where I keep on telling you people, please read current affairs. Read current affairs. Right? Till my last day for your batch, I'll keep on telling the same thing. Please read current affairs every day. Right? So what is the idea here? The question says, very recently you have seen the inflation rate is low, right? And GDP growth rate is steady. Steady means good GDP growth rate. Now, do you think both GDP growth rate as well as low inflation has helped the Indian economy? Is the Indian economy, is it in a good position? You'll have to justify your answer. You cannot simply write yes, right, and go forward. No, that is not the answer. You cannot simply write no and finish the answer. You will have to justify your answer, and that is where the data will be helpful for you. That is where the data will be helpful for you. Many of you keep on asking me, sir, should we remember the data? And every time you ask me, I'll tell you there is certain data you'll have to remember, and there is most of the data that you need not remember. For example, in the last 2 years, what has happened to unemployment rate? Let me know. What has happened to unemployment rate? Right? Hasn't the unemployment rate been on a higher side or not? You don't have to by heart, but you tell me, was the unemployment rate on a higher side or not? Of course, yes. What has happened to inflation rate in the last couple of years? Again, you don't have to buy it. For February, it was 3.4. For March, it was this much. Don't buy it. Waste of your time. Was it more than 6% or not on an average? Answer is again yes. So that is the reason, right? That's the reason I keep on telling you people, there are certain macroeconomic data. For example, in the last 2 years, what happened to unemployment rate? Was it higher? Yes. What happened to the demand in the last couple of years? Was it a concern? Was it lower? Yes. Did Indian economy experience a recession in the last 2 years? Again, the answer is yes. Right? Did Indian economy contract in the last 2 years? Again, the answer is yes. So that's the reason. Do not buy out everything. And it also doesn't mean you'll have to ignore everything. There are certain sets of data. Please remember that. Now let's start. GDP growth rate and inflation in recent times have remained steady. Again, please understand, I believe this question was asked in 2020, right? Mains. Don't worry. And before that, there was no problem with Indian economy in terms of, let's say, there was no COVID pandemic. That's a reason. GDP growth rate and inflation rate, right? Before that, they were stable. But today, if this question is asked this year, can you say there is a steady GDP growth rate in the last 2 years or last 3 years? No. Can you say there was a very low inflation rate in the last 3 years? Again, the answer is no. But anyways, right, when the question was asked, Indian economy is doing fairly well. GDP growth rate and inflation rate have remained moderate in recent times. And there's a connection between both of them. I hope you understand. We have discussed this. There's a connection between both of them. What is the connection? If GDP keeps on increasing, there's a danger that inflation rate will also start increasing. Right? I hope you remember the point. If GDP keeps on increasing, growth keeps on happening in the economy, there's a danger that inflation will also keep on increasing. Right now, that has not happened. Inflation has been moderate. GDP growth rate also has been steady. With the steady GDP growth rate, the GDP size, that is the economy size, has increased, and this has been associated with higher employment generation, reduction in the poverty. Having steady growth rate will also help government in introducing various important reforms to promote more growth in the industries. Next, low inflation rate will help us in ensuring that purchasing power of the common man has not gone down by a very great number. There is a certain amount of good purchasing power. I'm not saying there is no reduction. All I'm saying is, if inflation rate is 10% and inflation rate is 4%, don't you think in the second case, the purchasing power of the common man has not reduced by a large extent? I hope you understand this. When inflation rate is 4% compared to, let's say, a 10% inflation rate, there is a reduction in the purchasing power. But please understand, the reduction in the purchasing power is not very, very large. It's a healthy number. Right? So purchasing power has not come down, has not been affected to a greater extent, which will not have a huge impact on the demand in the market. Having said so, is the economy in a very good shape? Are there no concerns regarding the economy? Of course, yes, there are certain concerns. What are the kind of concerns? Food inflation has been higher. Even today, food inflation is very high in India. There is a distress in the agriculture sector. Distress means farmers are not able to earn sufficient amount of income. Farmer suicides are there. There is no stability in the production in the agriculture sector. There is a loss of incomes of a certain number of households. Stress is there also in various sectors such as a telecom sector, civil aviation market, etc. So what has to be the way forward? Right? These are the points. What has to be the way forward? Way forward, or the conclusion should be, the government of India should implement certain reforms to address the challenges faced by the agriculture sector as well as various sectors that are facing stress, right? Such as civil aviation market. This is how you actually place, or you basically have a model answer. Okay? Any difficulty? Any difficulty? Right? So these are the various questions that have come in the form of MCQ as well as a descriptive question from the concept of inflation. Now we need to discuss the questions on taxation, which we'll do it tomorrow. Okay? There are MCQs as well as descriptive questions on taxation. We'll do the discussion tomorrow. Done? Now, before I wind up, if there are any concerns, any questions from your side, please raise it so that I can address. How GST become regressive in nature? I'll repeat it again. Whenever you talk about indirect taxes, the impact of indirect taxes as a percentage of income is more on the poor people compared to rich people. which basically means the tax burden on the poor people is very high despite their lower income, and the tax burden on the rich people is very low despite their large income, which is nothing but the concept of regressive nature. Okay. How do we cover current affairs? I've told this in the first class. I'll repeat it again. Please read one newspaper every day. I'll repeat it. Please read one newspaper every day. Right? Do not forget it. Even though you have attended the class, please read the newspaper, at least economy articles. Right? Please read the newspaper every day. This would be my strong advice to all of you. Okay. How can we know which data is important? My dear, the data which is generally calculated for annual terms, right? Let's say for quarter terms, that data is relevant for you. Tell me, poverty data, is it relevant for you or not? Think of it. Poverty data, is it relevant for you or not? And right on the other hand, let me ask you another question. CPI inflation data for the month of March. Do you think UPSC will ask you that? Think of it, right? You already know the answer. Think of it. So the data which is very often changing, don't buy at it. Not at all required. The data for annual terms, for let's say poverty, unemployment rate in 1 year, that is the kind of data that you're supposed to remember. Okay. Sir, but higher tax amount as a part of GDP will not truly... Okay, I've already addressed this. Okay, now, any other questions from your side? Let me address it. In intrastate, example of a pre-GST era, why there is no input tax credit? My dear, do you remember the discussions that we had? CST. You tell me CST, will the second state provide you an input tax credit of CST that you have paid? This happens because you are not revising. Please look at one slide where I've discussed VAT, and after VAT, I've told you what is the problem even with the VAT. Under the VAT system, whenever interstate transaction happened, CST was imposed. That was not given as ITC. Point number two, even when you talk about intrastate, if the service tax is paid by, let's say, a supplier, service tax was collected by the central government, whereas VAT is collected by the state government. So you have two different governments collecting taxes. You are paying VAT to the state, you want input tax credit of service tax. Do you think the state government will provide it? No. Okay. How to start preparation for economics as a beginner? Now, this is my recommendation to you. If you are appearing for next year, do it simultaneously. Start reading right now and keep on reading newspapers every day, right? Keep on revising it. If you are appearing, let's say, after 1 year, that is, let's say 2025, do you need to read newspapers right from today? I would simply say not needed. So then when should I start reading newspapers? Right now, because you are studying economics, please read economics from NCERT, from a standard book. Keep the notes ready. And if you are appearing for 2025 exams, 2025, I hope you understand this. In such cases, maybe from May 2024, start reading current affairs. So based on that, you decide. Ad valorem tax and specific tax, right? I'll repeat it. Ad valorem tax on the value of the product. What is the value? Whatever is the price of the product, on that tax will be imposed. And on the other hand, specific tax not on the value, but on length of the product, on quantity of the product, on the height of the product. Can you understand the difference or not? Let me know. Can you understand the difference? When I say length, quantity, right, or height of a product against what is the price of the product. That's a difference between ad valorem as well as specific taxes. Okay. We should follow current affairs more for economic mains than static. What should be the best approach? Again, please do not have this kind of approach saying that current affairs is only relevant to mains. Absolutely no. Understand my statement? Absolutely no. That will be again a wrong approach. I'll tell you why. This week Sunday, right? The prelims exams are there. Generally around 15 to 18 questions are from economics. Please have a look at all the questions. You will realize that one or two questions are completely out of whatever book you are reading. Have a look at it, you will understand. Right? One or two questions completely new. Nothing, nowhere in none of the reference book they will have discussed that concept. UPSC does it. And remaining around 10 to 12 questions, all of them will be connected to current affairs concepts. Anything being discussed in the current affairs, they will ask you in the UPSC prelims as well as mains. Okay. What is structural inflation? Whenever there are infrastructure inefficiencies, that will cause rise in the market prices, that is called as structural inflation. Okay, that is basically the idea of a structural inflation. Is economics a very good optional? Listen to me very carefully. If you want to take economics, take it. But you will have to do a lot of self-study. Point number one. Point number two, unlike GS paper, do not imagine optional will be the same. In fact, I can say GS paper is just, if you imagine onion, right, or onion, the top one or two layers are GS paper. The rest of the important technicalities I'm not discussing in the classroom. That is not needed for GS paper. So if you're good in economics, your background is in economics, and you're comfortable with economics, then take economics as an optional. Otherwise, because some topper says, I scored very well in economics, if you take economics, please don't. Okay? Done. Let's stop the discussion today here. We'll continue the discussion tomorrow. Okay, we'll meet the same time tomorrow also. We'll have a discussion regarding the questions on taxation, right? And we will also discuss the concept of next chapter, that is banking. Very, very important. We'll discuss the chapter of banking from tomorrow. Okay. Thank you. Have a great day. See you tomorrow.